Hi, folks. Welcome this morning to another Morning Spaces with Kalu. This is just a weekly Twitter Spaces event that we try to do every week to talk about money, personal finance, and the economy, and what it all means, should we say, for our personal budget and how can we get better as a community. So we come together, we talk, and of course, we learn from each other, and then of course, we are better for it. So that's essentially what we're doing. So this week we have, if you've been in the markets this week, you must have seen what's going on. Everything is down, right? The stock markets in the US are down. And why we talk about the US a lot is because that's the largest and most liquid market in the world. And usually when the US market and the US economy starts to go down, we tend to have what's called a contagion event, right? Which means it spreads. So once the US is down, then you see it spreading all across to, say, Nigeria, right? Because that's what happens. So we're always very, very, interested in what's going on outside Nigeria, because that gives us an indication of what may occur back home, so that we can then take, action, take corrective action, or to, adopt a strategy. So that's essentially why we'll talk about the US a lot. It's the largest market, most liquid market. So we're very, very concerned about that. But allow me for the first 15 minutes, if you may, right, to just lay out what's going on in the world and why this particular event now seems a bit different from what we're used to, like in the past, right? So first thing to understand is that markets go up and come down. There's nothing new in the market crashing or in prices crashing. You hear the term buy the dip. That is because markets will go up and markets will come down. Value tends to stay should we say, level, but prices always go up and prices always come down. So you always hear it's a market, boom, burst, recessions, boom. It's standard. This one is a bit different. When I mean this one, the news we hear about the US economy and the financial markets are a bit different, because for the first time we're having stocks down. I just put a tweet out there. If you looked at it, the stock market, the entire stock market in the US, and literally maybe the stock markets in the whole world, are all down. So stocks this year alone in the US are negative 21%. And that's reflective of stocks in Japan, in Asia, in Europe. Everything is down this year. So US stocks are down 21%. Also, US bonds are always down, are down 15%. So you don't want to put money in stocks because it's down. You normally run to bonds, which are like less risky and tend to pay you a little more. They pay you less than stocks, but at least you get some safety there. Well, bonds this year are down 15%. So stocks are down, bonds are down. What about the uncorrelated asset like Bitcoin? Something we could run to and like take cover like till all this is over. Bitcoin is down 55%. That's in 2022, year to date, 2022. And we're talking about corporate bonds are down, government bonds are down, stocks are down, Bitcoin is down. The only asset class that is up in 2022 is crude oil, i.e. commodities. So we see crude oil is up, and that could be because of the war in Ukraine. It's also because of the policies of going green, so less supply and all that kind of stuff. But that's not really a return, right? That's a structural return because of there's no supply and all that. So that's what you see this year. You have the market is negative, and there's nowhere to run to hide. You can't run to bonds and say you want to hide in bonds, right? You can't run to even property. VNQ, the ETF that tracks US properties, also down. So you have falling asset classes in terms of return. Then you have inflation going up. So you have inflation in the US up now about 16 point. Let's look at the current figures. About 16.23 or so, or 63 or so. About that's just 16%. So inflation is going up, which means if you simply hold dollar in your hand, you are losing, right, due to inflation. The dollar return for 2022 is actually higher now, believe it or not. If you bought the dollar index, right, you'd be up about 8.3%, i.e. you bought the dollar via an index, right? Because as the world is going through uncertainty, everyone is going back to the dollar. So the dollar rates are going up. So if you held dollar will give you a positive return. So you've got stocks going down, you've got inflation rising up, and you've got no bond protection. That's the problem with what we're seeing right now. That in the past, if stocks were going down, people just switched to low risk bonds and they hide there. And if there's inflation, people go back to the stock market and then they say, well, there's inflation, I'm going to go to the stock market. But this time you're seeing that everything is negative. There's so much risk. We don't know how fast the Federal Reserve is going to hike rates. So we really can't plan. We really can't, put our finger to what's going to happen. That's part of the problem with this particular, should we say, market right now. We don't know what's going to happen. And so that's our problem. So the space today is to talk about what should you do if you're an investor, right? You have money in the market or you want to put money in the market. What should you do? How should you approach this uncertainty in the market? Because you don't know what's going to happen tomorrow. So how should you invest? That's what I want to talk about. So I've laid out the economic picture, right, of what's going on. High inflation, no asset class giving you a positive return from Bitcoin to bond, everything is low. And as a matter of fact, if you just held the paper, the US paper, the dollar paper, you'd actually be up 8.3. Remember, I'm not talking about you holding currency in your pocket, but actually investing in the US dollar index fund, then you'd be up 8.3, right? That just shows you that there's no investment returns out there. If you could make so much money from just holding currency, that just shows there's nothing really out there, right? So we've done that, right? Let's get into and I'm going to let you guys request. If you want to request to speak, just send me a DM or request to speak. I'll add you real quick. That's fine. So what should you then do, right, in the market going forward? So I would say overall, remember what Warren Buffett said, right? The stock market is a mechanism to transfer money away from the inpatient to the patient. What he's trying to say is that if you are the kind of investor that's always looking for the new thing, to invest, to chase returns, to trade, to be ahead of the curve, you're going to lose money because you're not patient. You don't have a plan, a long-term plan that you have basically said, this is what I want to do if the market does X, or this is what I want to do if the market does Y. Since you haven't done that, you're going to lose money. Let me give you let me break that down for you, that scenario down for you. By using an investor, let's talk about a US investor, and we're going to talk about a Nigerian investor, right? Let's start from the US investor, and I'm going to break it down if you are already in the market or if you want to get into the market. Now, if you are already in the market, you bought equities in 2021, right? That means that in 2022, you've already lost money, but you've lost what's called an unrealized loss. That's what you're making. It's not yet realized because you haven't sold. You have simply incurred a paper loss. So you bought, say, Microsoft, right? And Microsoft is down. So because you haven't sold, yes, on paper, you have lost money, but you haven't sold. So it's a paper loss until you actually actualize it. That then you then say, yes, I have made a loss. So keep that in mind, right? So if you have bought into Microsoft is down 26% this year. What should you do? Well, what you should not do is to sell it. Because once you sell it, then you've actualized that loss. You've made a real loss of 26%. You either want to wait, or if you think Microsoft, the company, that the long-term earnings of the company is still going to give you a good return in the next 2 to 3 years, then you might look at the price today and say, should I get into Microsoft at this price? So which takes us back to a question we didn't attend. What is the price of Microsoft? And is the price of Microsoft going down? Is that a dip? Should we be buying because the price has gone down? Is that a dip? Let's clear that up real quick before we then go into the strategies. The price for Microsoft today is $247 US for one share. So $247 buy you one share of Microsoft, and it's down 26% for the year. Now, is this a dip? What we're asking is that if you had bought Microsoft, right, at the beginning of the year, What's the highest and the lowest price that Microsoft has ever gotten to, say, this year? That's what I want to start with, to see if this is actually a dip and all that, right? So our highest price for this year, 52-week range, let's take a whole year, like a whole year. The highest price Microsoft has gotten to is $349. So highest price, $349. The lowest price it's ever gotten to, $241. This is over a 52-week period, so like a year. The highest is $349, lowest is $241. And the market price right now, as we have said, is about $270. So is this a dip? Should you buy now because the price has fallen? The answer really is this. Why has Microsoft stock gone down? Well, because in the US, the Federal Reserve is raising interest rates. When the US Federal Reserve raises interest rates, it makes the cost of doing business harder. So if you have a credit card and you want to buy stuff for your credit card, it's more expensive. If you're a company and you want to expand and you're borrowing money to do business, it's more expensive. What does Microsoft do? Microsoft provides services, right, to companies, IT services and all that to companies, which means that every company that is buying Microsoft products is expanding and is going to spend money. If those companies are buying Microsoft using a bank loan or borrowed money, then it's going to cost them more, which means every company is going to say, maybe we delay investing this year and wait for next year to see if rates are going to go down. The more companies do this, then the more Microsoft products sell, which means that less earnings are going to come to Microsoft. So you see, as the interest rates go up in the economy, then less SMEs, less individuals would buy products. And if less people are buying products, then that means the earnings of Microsoft is going to be affected. So the question is then, when the share price goes down to the price it is right now, right? What is it a dip? Or is the market essentially saying that we are reducing the price of Microsoft to 247 because their earnings in the future is also going to reduce? That's what's going on. The stock price that you see is looking into the future, not today. So the stock price for Microsoft is 247. The market is telling you that the earnings for Microsoft into the future are going to be $247 if you discount it back to today. That's what the market is saying. So you want to ask yourself, is the market over discounting or is the market accurate? If you think the market is over discounting, that is saying the future is going to be worse than it is, then 247 looks like a deal for you. Then you buy. But if you feel the market is not even taking into account the issues that are going to happen in the market going forward, then you don't buy, because to you, it's even going to get worse. So 247 is even giving them a higher value that they have. Remember what we said, the 52, the highest price markets have gone to for 52 weeks is $349. The lowest it's gone to is 241. Right now it's at 247. So it's near the all-time low. But this all-time low, what is the earnings? We're looking at the US that has high inflation and high interest rates. That's the question we want to ask ourselves. Is the future for Microsoft going to be better than the current rate? That's essentially the question you want to ask. And once you get that answer, you can then say, yes, I'm going to buy or not going to buy. So to answer our question, if you are already in Microsoft today, you want to ask yourself, at $247 per share price, has the earnings been taken away? Has the earnings been discounted sufficiently from this price? If your answer is yes, that they fully priced out the earnings, which means that Microsoft has taken into account that the revenues is going to lose because interest rates are going up, then it's a buy. Or at best, it's a hold. Then you simply stay there. If you think the market has not fully discounted the carnage that will come when interest rates keep on going up and up and up, then your 247 is going to be really, really overpriced. Should you sell? It depends on your objective. And I give an example. If you bought a house in Lekki, you bought a house in Lekki for say ₦1 million, and you were going to live in that house for the next 30 years. If the price of homes in Lekki crashed to 500,000, will you sell your house? Not really, because you are going to live in that house. Your objective is long term. You don't really care about the short term fluctuation of the market. You are more concerned with the long term because you are living in that house. You see the difference? But if you are buying and selling homes in Lekki, you are buying and selling homes, that was your business. You buy a house for 5.4 million, sell for 1.2, and the price of homes fell to 500. Oh, now you have a different objective. Now, because you are borrowing, that's another thing we want to talk about. Because you are borrowing to buy and sell homes, you are going to be like, wow, I want to get out of any debt that I'm holding. I want to sell quickly, pay off my bank debtors, and not owe anyone. So you have different objectives. So if you are already in the market and you have a long-term objective, you should just ignore what's going on in the market right now. Don't look at the news. Don't listen to the news. Don't sell. Just hang in there. And if you think that the price that is the market today is actually overpriced, you can actually start to buy, right? Because you think it's a dip. When I mean a dip, that the price that is being offered to you today is lower than the intrinsic value. That's what a dip is called. If you think it's lower, then you buy. That's if you have a long-term objective. But what if you have a shorter term objective? Let's say you borrowed money to buy Microsoft because you thought the world was going to grow by 25% in 2022 after COVID. And right now, within the world is negative. What should you do? Guys, you should sell. If you have borrowed to buy stock and you are holding a margin call or you are having debt to hold that stock, then you want to exit that position because the cost of the debt is now more than any profit you would make from simply holding. So you see, the correct answer has got to do with your objective, not what you are buying. This goes if you are buying crypto, if you are buying real estate, if you are buying shares, it doesn't really matter. If you borrow to buy, or if you need that money back in a short period of time, or if you think you cannot take the risk, then you should have sold because the cost of you holding onto that asset class is going to be more than whatever profit that you would get. This is the thing. It has nothing to do with the asset class, but your objective and how you are funding that objective. If you're a long-term buyer, the same thing. If you bought Bitcoin, you bought equities, you bought property, you bought bonds, and you're a long-term guy, you're looking at 5-10 years down the line, then why are you selling, right? It's either you are averaging, i.e. you are buying at this lower cost to make your prices fall, or you are holding because you think in 2024 or 2025, the world's economy would improve and you would have bought into a great company at a great price. So it has really to do with your objective, long or short. Are you a long-term guy? Are you a short-term guy? And how are you funding your portfolio? If you have a commercial portfolio that you're funding with margin and debt, guys, you're in big trouble, right? You want to exit that position. That's why you see a lot of Bitcoin prices going down. That's what's going on. It has nothing to do with if Bitcoin is good or bad. It really has got to do with rotation. People are selling this to get into this because they're trying to protect their portfolio. But if you're not a manager, if you're not managing money for people and you have your own personal portfolio, don't rush. Don't listen to the noise on the street and then try to sell down and actually actualize your loss. That's going to be a mistake. Don't rush. Don't listen to the news that they're telling you, hey, stop it, ignore it. Keep your long-term prospect picture, and that's essentially what you want to do. Keep your long-term picture in view. All right, guys. So I tried to just give you guys lay out the framework for you guys. Just to summarize again, we've talked about what's going on in the world. Because after this, we're going to take the questions, right? I already have a few DMs. I'm going to read the DMs. So just summarize what I've talked about. The entire world is going through what was called we're in a slowdown. The US economy may be in a recession if we get a second negative print of GDP. So right now, we are in a slowdown. We have one negative quarter. We'll get a second negative quarter, then we'll be in a recession. Even if there's no negative quarter this quarter, the general sentiment in the US is that the economy will go into a recession. I'm looking at the US retail trade numbers. It's down. It's down really to about nearly a 0.00, right? So the market really has calmed down. No one is buying stuff anymore. If you look at say March of 2021, the figure for US retail sales, the growth was about 10% growth. Since then, it's just cratered. It's not been more than 3 or 4% in 2022. Why is US sales important? Because the US economy is about 68% personal consumption. So when you see the US folks stop buying, that tells you a recession is coming. And especially because interest rates are going higher. So US guys are not going to use their credit cards to buy anymore, or they're going to reduce buying on their credit cards. Once they reduce on their buying on their credit cards, it affects earnings. So it affects companies like Microsoft, because then no one's going to buy Microsoft products, and the Microsoft products are not selling. It reduces their earnings. If their earnings are reduced, then it reduces the share price of Microsoft. That's the connection from the Fed increasing interest rates to a company's stock falling. Once you understand that connection, then you're okay on your portfolio. So to cap it again, the markets are down. All asset classes are down. Stocks are down. Bonds are down. Corporate bonds, personal bonds, even Bitcoin is down. Everything is down. What's up? Energy, commodities, they are up. The US dollar, if you buy through an index, is up by 8%. This is not actually good. This shows that there's no investment options out there. So everyone is just going for the riskless trade. That's what's happening in the market right now. We're also seeing the US markets, the Fed is going to increase rates to fight inflation. This means there's going to be what we call demand destruction. To kill inflation, they're going to make prices very expensive so no one can buy anything, so that price will fall by default. That's what's going to happen. It's coming. Rates have gone up this week to about 0.75 in the US, and rates are going to keep on going up. If you have all this Robinhood, all the stock trades, you said they've given you a notice on your share that, hey, your margin interest rate has gone up. Or if you borrow from a bank or credit card, they would have given you a notification that your shares or your APR, your interest rate that you pay when you borrow, has also gone up. So it's going to happen, guys. It's coming. So there is nowhere to hide. There is high inflation. But like I said, if you are in the market for the long term, be careful about selling. Be patient, because the stock market exists to take money away from those that are not patient and give it to those that are patient. So if you have no debt and you are buying asset classes without debt and you're not reporting quarterly or annual to anyone, hold onto your portfolio. If you see an opportunity, buy more. But if you're a short-term person or you have borrowed money to buy, then I think you have to redo your portfolio objectives, because the cost of you holding that portfolio is going to start rising. At what point is the benefits of future earnings going to override the cost of the current debt that you're holding on that portfolio? So there are two questions you want to ask yourself, right? This is all we've talked about, all for the US. Everything we're talking about here is all for the US. And the US is easier to determine and to plan out, because the market, you can see the scenarios and you can see the planning numbers and you can put your finger on it. What about for Nigeria? What's going to happen in Nigeria in the next, say, we have an election coming up. What's going to happen and how should you position yourself? I think Nigeria is also very easy, but we have to talk about Nigeria in a macro language, right? The big thing that's going to happen in Nigeria is the election. Nothing else is the election. The elections are going to happen when? I don't know, February? So from now till February, we're going to be seeing the three political parties sort of present, campaign, and all that. And investors are going to be watching to see who's going to win. Right now, we have three quote-unquote businessmen, right, that are running, and they will all have their different proposals. But all three of them look like they are business minded. They all look like they are going to like spend a lot on infrastructure. They look like they're going to spend money also in the economy, fix a few things here and there, which means that the economy will be reflated, right? So if we start to get a better sense, let me just give you this statement. If the elections happen and there is no rancor, people believe that an election happened and the winner was chosen and there was no rancor, no fraud and all that. People lost because they lost, people won because they won. The Nigerian economy will get about 25% instant boost. And I'm just being charitable here. There's going to be an inflow of remittances. There's going to be investing in the Nigerian economy simply because lots of the current capacity right now to invest is not being deployed. Lots of Nigerians are just taking money to dollar and just holding and just waiting. Nobody is investing. That's why you see all this prices going up. It's more of no supply. Nobody wants to commit major investments in Nigeria right now because we want to watch and see what's going to happen. So once elections gets done and people believe that a winner emerged without any rancor, you're going to see that money release into the economy, the optimism economy. That's what we call it. The release of cash into the economy will stimulate a lot of goodwill, right? The foreign partners, everyone's going to come in and they're going to see a big jump in the stock market. I'm going to see a reduction, I believe, in the lending cost across Nigeria for the government bonds. So if you know this, right, when is the best time to buy Nigerian stocks? Is it in December or in February when the winner is known, or is it now? This is the thing for you. If you invest now in Nigerian equities now, and that bet pays off, then you make more money. Because now nobody's buying, right? Everyone's thinking Nigeria is quote unquote not good. So if you take a big bet on Nigeria right now and Nigeria does turn out to work, then you make a lot of money. The more you wait for February before making that bet, then the less you're going to be able to make a good return because everybody's going to be like you. They're going to also wait and see that, wow, Nigeria is going to get pretty good and we're going to invest and we're going to make money. So the margin for profitability is going to reduce as we get towards February. If the elections turn out to be rancorous and there's a lot of fighting, the markets are going to crash. And when I mean crash, it's going to be bad because money is just going to leave. And so what you're seeing now will just be worse. But this is the thing. So for Nigeria, it's not really the inflation numbers, it's not really the macro numbers. Those things are going to get worse. Let me just give you that expo. The inflation number is going to get worse. The deficit is going to get worse. All that's going to happen because the government from now till February is really not going to do a lot. They're not going to take any hard decisions to fight anything before that. So the exchange rate is going to go worse. It's going to go higher than 16 that you're seeing because there's just going to be no real management until we have to get a clear winner. So that's for Nigeria. Nigeria is more of the elections. US is more of the, should we say, where inflation is going to go to. In a final word on the US, the inflation in the US cannot be solved by the Fed raising rates or reducing rates. It's an energy inflation. It's driven by the high cost of energy. And it's more political than monetary, right? Because all the US has to do to fix this to say, we're going to allow drilling, or we're going to reduce a few green policies. Once the market, remember the market thinks into the future, not today. So the price in the market you see is the price into the future. If the market believe that long term, the cost of doing or drilling for energy in the US is going to reduce or will be stable, then oil prices are going to crash. But if the Democrats remain in power and they are quote unquote committed to a green future, then oil prices will never come down. That's just the honest truth. And if they don't come down, then inflation can't come down. The Federal Reserve cannot pump crude oil into the economy. It can make crude oil expensive, but it can't pump crude oil in. And that's going to be the difference. So that's a caveat for us to also watch for the US as well. All right, guys, I think I'm done. It's about 30 minutes. I normally talk for 30 minutes. We have no guest today, it's just me talking. So now DMs are open. You can request them to speak. I'm just going to read my DMs pretty quick. Will there be a replay? Yes, of course. We replay the spaces on my podcast, and I do a post out, so you will get the replay of this. Once we're done, you can see it and you can speak. All right, let me just add a few guys to speak. Give me a sec. I'll read my DMs again. Picture. Let me see. Give me a second. Okay, yeah. So what do you, someone's asking me, so what do you think about MTN? Yeah, so it's a specific question. I try not to answer specific questions, but I'll try and give you like an answer. Let me just give an answer. MTN is a bet on Africa, on the growth of Africa as a whole. What they are doing is they are selling off all their exposure in the Middle East, in other parts of the world, to invest in Africa, in data, because to them, their mind is really that, listen, Africa is going to grow and the youth of Africa are going to need data and want to be the provider of data and services to a growing African population. So if we invest in Africa now, when it's quote unquote cheaper, we would have built infrastructure and they will now basically come to us. So it's data, it's fintech, whatever you can do on your phone, on your mobile, on the internet. MTN wants to be the gateway to that. Great strategy. And I think they will be rewarded in future as Africa then begins to show growth. So look at MTN as a story of growth in Africa. If Africa grows, MTN grows. If Nigeria simply grows by 25%, for instance, what do you think happens to MTN? They're going to blow up, right? Because their biggest markets in Nigeria, they just got a license for fintech in Nigeria. If people in Nigeria start to use that fintech, that's going to be a direct revenue growth for MTN, irrespective of what other Africa or even the world does, because they're now an African company. So MTN is now the largest single market in Nigeria via their mobile phones and via their Momo. They're going to start to do other stuff, insurance, all that kind of stuff on that phone. So that's a great company or a great way for you to invest, not just in Nigeria, in also in Africa. So I'm bullish for MTN. Like I said, it's a great way for you to basically have exposure to Africa. Andrew, what's up? I just added you as a speaker. Thanks for requesting. If you want to make a comment, please go ahead and unmute. I'd love to hear what you want to say. Hey, Andrew, you can unmute and go ahead and speak. I have a few DMs I would like to get to as well. Let me see. What's this guy saying? You forgot to mention who about. Would someone is saying, do you advise people to invest in Nigeria? Of course. There's insecurity and inflation and devaluation everywhere in the world. Where do you make the most money? Do you make the most money in the US market or in the Nigerian market that has more growth? The US it's a very, very big market, right? And for you to get growth in the US market, you have got to look for that growth. In Nigeria, there is no power. Imagine if just investing, if power got better by just 10% in Nigeria, just 10% in Nigeria. That's big, big, big revenue growth right there for your portfolio. So I would say always never count out Nigeria from your portfolio. Never do that. Yeah, Andrew, you came and you hopped out again. I'm just adding you. You can just go ahead and interrupt me once you're in, and you should be fine. So I mean, I never ever count out Nigeria. It's the largest economy in Africa, and you want to be in that sector as well. Andrew, go ahead.
Thank you very much. I was going to ask, and somehow I think you answered it part of the way. We cannot tell how long the inflation, the beating that the U.S. economy has taken, we cannot tell how long it will last. But I wanted to ask, what are the factors that will reverse this economic downturn, so that some of the stocks, we can have an idea
Yeah.
What we should be looking at to say when will the stocks come back up?
Great question, Andrew. Great question.
Thank you. I think that's one of the questions I have.
Okay, and so I'll answer. Then you can do a comeback if you want to. I think the key thing. Remember what the U.S. is a story of high inflation. So because there's high inflation, the U.S. Federal Reserve is increasing the costs of doing business by increasing the cost of money. So what you want to watch out for is inflation coming down. If inflation comes down, then the Fed reduces the cost of doing business. And then, of course, more Americans can spend because the US is 68%, their GDP is 68% personal consumption. So I'm just sharing on my tweet, Andrew. If you look at my tweet, I'm just sharing the tweet right now of US consumer spending. And you essentially will see what the number is. It's usually flat. So no one is going to buy, in the US, you guys have your Costco, you have your dollar store and all that. No one's going to buy stuff, right? If it's going to cost them a lot to pay for it and all that. No one's going to buy cars or homes and all that if the interest rates are very, very high. So I just sent out a tweet on that. And if you take a look at that, if you watch that chart, if you watch retail sales, right? If it starts to go back up, or if you watch the interest rate in the economy starts to go back down, then that's a good indicator for you that the markets in the US are going to calm down and will be better for investment. The problem, Andrew, is this. What is causing the US inflation is not printing of money. I know there was a printing of trillions during COVID. Yes, I get that. But the real driver of inflation in the US is energy. Energy prices have gone up because there are lots of policies right now in America that are not favorable to fossil fuels, including stopping the banks from lending to them. So when you do that, the oil company guys are not going to build refineries. They can't even build a new refinery now because of too many regulations. The refinery in California that is being converted to biofuels. Same with the refinery, I think, in Louisiana. Shell tried to sell the refinery in Louisiana. Nobody bought. It's not because no one had money, but it's not worth the hassle to own a refinery in America. So because of this reduction in supply, you're going to have higher energy costs in America. Once you have higher energy costs, you then add in the cost of fertilizers being expensive because of Russia. You see food, you see fuels going up. So once food and fuels are going up, that's reducing disposable income. Then you then throw in the killer of higher interest rate. That just kills off the US economy generally, and that's going to happen till then. So what you want to watch out for, to answer the question, Andrew, is watch out for the retail sales, watch out for the Fed reducing interest rates, and watch out if possible, I don't think it's going to change the price of gasoline, the average price of gasoline. If those three things start to work in your favor, the market will recover. Did you have a comeback, Andrew, or you're fine?
Yeah, thank you very much. I really appreciate that.
Yeah, you're very welcome, bro.
And I want to come back. I want to ask about the Nigerian situation.
Yeah.
You have said a number of times that the three presidential candidates we have are like business people.
Yeah.
They're likely there's likely going to be improvement after the elections, especially if it's rancor-free.
Yeah.
But then,
Andrew, you're in the Matrix. I can hear you again. Andrew, if you can hear me, I can't hear you. I couldn't hear what your question. You went into the Matrix there. So, Andrew,
okay.
Ask again. Do you mind asking again, please?
Okay. So, what I wanted to ask is, if they are all, they are all, you have a positive outlook for all of them.
Yeah.
Then what is the reason for, like, what reason, if foreign investors, for instance, will want to wait to see the outcomes of the elections?
Yeah. I think I understand what you're trying to ask.
What reasons will the local people have to their investments, for instance?
So Nigeria right now is not doing a lot of, should we say, smart forward planning. The central bank, for instance, has banned cryptocurrencies, right? Because they said I don't know what their real reason, but you can't do cryptocurrencies in Nigeria. But Nigeria is the largest utilizer of cryptocurrencies in Africa, right? So that right there is a lost opportunity right there. Nigeria is doing capital controls, but it's looking for remittances to flow back into Nigeria. So the problem is the policies are not aligned with the economic, what the economy wants to achieve. They want to push exports, but they want a strong naira. You see what's going on? So most of these things is because those policies are not in line. That's why you have no results. But when you have a guy at the top of the ticket or as a president that understands business, if you understand that, listen, if we fix the ports, you can get exports out, you can devalue for a season just to push this, then you start to see the economy take dressing. And then everyone starts to understand, okay, we're not going to go out and attack MTN and fine them $20 trillion because they broke a rule. Even though they broke a rule, we have to be sensitive to what the international community would say. So when a businessman is in charge, look at when Trump was in charge of America. Let's remove all the other Trump things. But look at when a businessman was the president of America. Look at it, how they, I mean, if you know economics, there's something called the Fisher curve that says that you cannot have low unemployment and low inflation. But under Trump, that rule is an economic rule. It was broken. They had low unemployment and they had low inflation, because when he knows what to do in terms of business. These three guys we have, Atiku, Peter Obi, Tinubu, they are all businessmen in their own right? They are better by a mile than what we have today. So I think that if they get in, they will be more sensitive to what the world and Nigerians are seeking. And I think that dividend of democracy from the business side will simply then cause this, boom. That's my take. Yeah, that's my take.
Thank you very much. Please, what would you have to say in regards to Airtel, MTN?
It's the same thing. It's the same thing. No, it's the same thing. When I say MTN, I'm talking about the telcos that have got this MoMo license. So Airtel is same as MTN. Please don't. Yeah, when I'm talking MTN, I'm just talking MTN because So it's MTN. If Airtel has got a license as well. All those business facilitators, not just MTN, Flutterwave, all those people, those business facilitators that are in Nigeria right now that are suffering because the environment does not favor them. When you have a 2023 new person in power that is more business friendly, you're going to see them boom. This is the thing. Real estate, pensions, banking, insurance, you're going to see those sectors just take off, because then they have someone that understands business at the top of affairs. That's the point I'm making, not just MTN per se, right?
Thanks a great deal. Thank you.
Okay, so Mr. E, I'm going to have you next, but I have a question on from Carl Ken. Carl Ken is asking, which apps would you recommend for buying Nigerian stocks? I'm going to post, Carl Ken, I'm going to post again on Twitter. From my website, go to my website, it's just my name, www.kaluaja.org. Just go to financial apps. I have a curation of all the Nigerian financial apps that you can use. The ones I personally use, I'm going to give you the ones I personally use to buy Nigerian stocks, right? I like Chaka, right? I like Chaka. I like Trove. I like Cowrywise. I know some folks that use Bamboo and the rest. I don't use them, but I have no issues against them and all that. So I'm just going to put that stuff up there. I'm just going to tweet financial apps now on Twitter Space, and you can just log into and use any of them. I mean, the key thing for you to remember that these financial apps are just the front of the office. They are always partnered with local Nigerian stockbrokers. So I would say when you want to choose a Nigerian app, ask them who is your local Nigerian stockbroker, and make sure that local Nigerian stockbroker is licensed by SEC and all that, right? That's the important part. you're just buying shares, say, from Chaka as a front end, right? So always make sure you find out from Chaka. Hey, Chaka, who is your local Nigerian stockbroker? Are they registered with SEC and all that? Make sure you are buying from a regulated person. So Kalkan, I've given you, it's a whole link there. I just posted a tweet out there on my website, carloaja.org. Financial apps. If you go in there, you see a whole list of apps that I use. Then you can basically just pick any one that you want to and just run with it. Excellent. Mr. E, what's up, sir? On mute, let's talk.
Hey, Carlo, how are you doing?
I'm very, very well, sir. How you doing? I see you talking trash about Nigeria. What's up, man?
No, I'm actually not talking trash about Nigeria. I'm just basically just being factual and saying that, if you live in the diaspora, I struggle to really understand why you would even invest in Nigeria for now. Here's my reason why. Number one, insecurity issue. Yeah. Number two, the devaluation of the naira. Number three, inflation is going to eat you up. Just common sense. Even if I change $10,000 now and I put it in naira, by the time I want to change that money back to dollar within the next 2 months, that particular money is actually devalued already. So I struggle to see why it's a very good investment advice to advise anyone to even invest in Nigeria for now. Yeah, maybe later on in the future, things might be good, but I just struggle to see that. The other part I wanted to talk about is the Microsoft, and also there's something you did not really mention, which is also people were overpaying for stocks. Within the last few years, even from Donald Trump to Biden, I know you gave Donald Trump credit, which is okay, but Donald Trump alone printed around more than $7 trillion. And those $1 trillion would always make those stocks look like, oh, they're so good. We were overpaying. Within the last few years, we've been overpaying for stocks. We've been overpaying for even assets. And that's exactly what's happening. And if not because of the logistics issue and because of some bottlenecks, the economy would actually look like it's actually growing, because the unemployment in the state is actually not that high for now. So it would have actually looked like it's going well. But it's just because of the bottleneck and because of, the logistics issue and, just prices, just what you said about energy prices going up, that's actually affected things. So over the last few years, we have been overpaying for stock. Just take a look at Microsoft. Just last year went almost like, 200x. Yeah. Like we were overpaying. Sometimes you need to go back and look at the company, look at the finances, do a little bit of calculation, check their PE, check their future growth. Look at what they have in the roadmap before you invest in a particular company. I'll give you, for example, like for me, I drink Starbucks every day. I go to Starbucks and I love the atmosphere and I drink Starbucks every day. A few years ago, I said to myself, I spend almost like $4 every day buying Starbucks. Why don't I just invest? I'm putting it in my TFS. That's how I invested in Starbucks. So you also have to look at their financials, look at like how many stores they're opening, how they're expanding, their cash in hand, their cash flow. There's so many things you have to, look at. The same thing I did with Chipotle as well. Yeah. So you have to look at their financial. Like the true valuation for me, for Microsoft, I'll probably just take it back to maybe 2019 and add, additional maybe 10% growth on top of the 2019 price and say, okay, I can pay this amount, which is probably going to be around 200. So if it falls down to maybe like 200 and something, 210, 205, I can be like, okay, I'm a little bit comfortable. But what's happening is if you bought Microsoft like last year or early this year, you were paying like 5 years future value of that.
Yeah, company. I hear you. You're overpaying, right? I hear you.
Exactly. So that's exactly what's happening right now. So to me, if you have any stock that is doing well, maybe you're already 40% up right now, just take profit, hold that cash, look for other very good companies, very good ETF as well. Once the price goes down a little bit, then you can jump in. That's just what I would do, and also just take profit. I know you're saying, hey, don't sell. But to be honest with you, if you don't sell now, you're probably not going to see that same high price again to the next 3-4 years, because we're probably going to have another stagflation, or we don't know what's going to happen.
Exactly.
Just basically, I know I mentioned to you a couple of points when I said, hey, short QQQ. I was expecting you to ask me why, but you did not ask me why. Can you see the reason why I said short QQQ now?
No. I hear you. I think you made a lot of good points here. I was writing them down, and I can spend the whole spaces on this, right? But let's go back to your Microsoft. And you made a statement. We don't know what's going to happen. That statement is we don't know what's going to happen. Because we don't know what's going to happen, what should we do? If we don't know what's going to happen, if you don't know what's behind the door, should you open the door? If you don't know what's going to happen, then you want to basically know or find out before you do it, right? Remember what I said. Your strategy is going to determine what you do going forward. If you bought a house in Lekki, or in your case, you bought a house in Virginia, and you bought that house for $100,000, let's $500,000, and the price of homes in the US crashes by 50%, and you live in that home, will you sell it? Of course not. Where would you move to? You would hold to that home because that's where you want to live. It's in your good school district. You're not going to say, oh, I'm going to sell this home and buy a cheaper home downtown because it's cheaper. No, your objective was to buy a house in that school district for your kids to go to. So your objective determines your actions. If you bought Microsoft because you wanted to buy a good, diversified company, then why are you selling? I look at numbers for Microsoft. Return on investment for Microsoft, 28%. Return on equity for Microsoft, 47%. Return on assets for Microsoft, 21%. Dividends, not a lot, 1%. PE ratio for Microsoft, 25%. It is high. But this is a company that is diversified in personal, in defense, in corporate, good brand name. It's buying Blizzard games. It's doing a lot in that space, right? Why do you want to sell? If sell and buy what? What would you buy?
No, so I think you do have a point. If you're buying, at the end of the day, the reason why we invest, why we buy stock is just profit. Let's just be honest about that. So for me,
is it really profit?
To be honest with you, let's just be very frank. I think it's all about profit.
No, but if I'm going to retire in 20 years and I'm earning $1,000 a week. In 20 years, my $1,000 will no longer be $1,000 in 20 years. So I want to move my $1,000 from today to 20 years and still have my $1,000.
So that's a future value. By the end of the day, it's still profit.
It's not profit. So look at it this way, right? It's appreciation in my principle. I want to appreciate that principle. I want to make sure that I can earn enough in the next 20 years that if inflation removes from my principle, the gains on that principle are able to give me a return in 20 years, which means I might lose money in 4 years, but in 5 years, in the next 15 years, I make my money back.
Yeah, but at the end of the day, I think let's just, forget about future value. At the end of the day, you want to make money, correct?
Make money when?
Whether you're waiting for the future value 10 years from now, you expect that the money you're putting in today will appreciate.
Yes, but when? This is the thing. You simply can't say.
So I get what you're saying. I'm not arguing with you. I'm just saying at the end of the day, for me personally, I invest, one, because I believe in the company. Number two, I believe in their finances. Number three, I also want to make money out of it. Let's just be frank about that. So you did say a whole lot of things. I'm not trying to dispute anything.
No, we're not arguing, Andrew. We're making sure people are listening. So we're trying to talk so people can follow and Google and research and see what we're saying. Yeah.
So one thing you said I really like is the part where you mentioned strategy. Yes, that's very correct. If you're contributing, let's say $200 every month in an ETF and you're buying stock, just keep doing it. It doesn't matter whether the market is going down or going up. Precisely. Dollar cost average, very important. And even if you're losing right now, and you have money, dollar cost average is very, very important. Just put some money in. If you have extra cash, you believe in the company,
Andrew.
Just keep buying. Dollar cost average at the long run, it will always make sense.
This is all I'm saying, Mr. E.
Yeah.
Excellent. Yeah. And just for people to follow what Mr. E is saying with dollar cost averages, that if you pick a particular stock or a particular index, you can take a same sum of money and you can just buy the same stock or the same index every month, irrespective of the price. So if, for instance, I buy QQQ, which is an index, or I buy VTI, I can just simply buy that $50 every month. I don't care about the price. I'm just buying it if it's up, if it's down, because it's a good stock. You want to make sure it's a good stock or good ETF, then just dollar average it. But Mr. E, I wrote a lot of stuff down. I want to get through my long list, right? Number one, you talked about the US market, right? Remember, before Trump came in, if you plot a 10-year graph of the best performing stock market in the world, which is it? Is the US. And not just stock market, the entire world, right? Pick the asset classes, Japanese property, Belgian chocolates, pick the asset class. The top performing asset class the last 10 years has been US equities. If you use VT.
You're correct about that.
What's the second?
No, one quick question. How much has the government printed within the last
10 years? This was before
years?
The government, but this is the thing, right? Why is the market going up, Mr. E? It's
because we keep printing money.
It's not the printing. Zimbabwe printed money.
No,
why isn't Zimbabwe going up in price? It's not the printing, my brother. That's what I'm saying. It is the quality, the productivity of the US market. There is only one market in the entire world that has FANG. Facebook, Apple, Alphabet, Microsoft, Netflix. Only one market in the whole world has that, and that's in the US. If you take away FANG from the US market, it's Europe. It's normal, boring company. So it's not the printing, it's that the currencies were printed and invested in companies like Snap that turned a game into $1 trillion or billion-dollar company.
Yeah, but I understand what you're saying, Carlo, but let's go back, pick out the company and look at your finances and try and, estimate what the current valuation of that company should be. You will also discover something. Most of this stock we're talking about, the FANG, we're actually overpaying for it. That's the truth about it. Let's say now, if I do a true valuation of, let's say, Tesla, I look at Tesla, in as much as I know Tesla is going to dominate for the next 5 years. Right now, Tesla should be worth around maybe $150,000, $150, not even $1,000 that we're seeing before, not even $2,000 something. So we're overpaying. We're paying for the 10 years future value of that stock because we believe in it and saying, okay. But the truth is, most of these companies are overpriced and we're overpaying for it. And people have already been mentioning this for years and say, hey, be careful, we're overpaying.
Mr. E.
Yeah.
There's this very popular video. If you guys can Google this video if you're listening, where a guy, I think it's on 60 Minutes. 60 Minutes was interviewing a stockbroker and they were talking about Amazon. And the stockbroker was telling the 60 Minutes guy that Amazon was going to beat Sears and all those big box stores back then.
Yeah, I've seen it.
You've seen that video. And then the 60 Minutes guy was like, you mean Amazon, this small company online with this huge valuation is going to take over Sears? And the guy said, yes, that's what the market is saying. When you say something is overpriced, Tesla, I think Tesla's PE at a point, when we say overpriced, we're talking about the price to the earnings.
No.
That's what the price to the earnings. So let's land.
I also factor in, stock outstanding.
No, Mr. E, let's go straight to the heart of it. If we say a stock is overpriced, we are referring to its price vis-a-vis its earnings, because every stock price is the future value of its earnings. So when we say the PE is 10 and the PE is 20, the stock with the PE of 20 is more expensive than a stock with a PE of 10.
Yeah, but there are also other factors.
No, but Mr. E, let's just agree on this point. There are many factors,
yes,
but
yes,
the stock price,
yeah.
the stock price is the present value of earnings. We don't use the stock price to determine if a stock is cheap or expensive. We use the earnings, right?
So
the point, nobody, I want to learn. The point I'm making is that Amazon back then was $500, and everyone said it was expensive. Now what's the price of Amazon right now? What's the price of Amazon right now?
I could also make the same case for big companies like Cisco and so many other tech companies.
So it's earnings, Amazon, it's not the price. When you said it, we were paid. If I see a Tesla today, Tesla's market cap today is more than Benz, BMW, Ford, GM combined, the market capitalization. But the sales of Tesla is not up to 10% of these companies. So the market is saying in the future, the earnings of Tesla is going to be far in excess of Benz, BMW, GM, Ford, Chrysler. That's what the market is saying. Hence, it takes the price up. The market looks at the future, not today. So I hear you. Sorry, I see your hand, but earnings, companies fail, companies make it, but earnings is the problem. If earnings are going to keep on going higher, then the price will keep on going higher and you will overpay. You will overpay for a good company. That's the truth. That really is the truth. Oh my God, I have lots to get back, but let me get other folks to speak. So I see I'm going to call you up. Big Chi, unmute, sir. Mr. E, don't go anywhere. I think we're going to come back to you. Just stay right there. Hey, Big Chi, how you doing, sir?
I'm very well, Chief. How are you today?
I'm very, very well. Thanks for joining me. I appreciate you. What do you want to talk about, sir?
I basically was going to chip in on the conversation between yourself and Mr. E.
Don't worry, it's not going anywhere. We have him here.
Well, and I think it's important, for perspective, right? When we speak into finance, most of the time, there are usually different angles to any conversation that we decide to pick on. So pretty much it was speaking to overvaluation of, stocks being underpriced or overpriced, right? And I wanted to cite some analogy that I think might help the conversation, right? One of the analogy is on the fact that a stock might not move in price in 5 years. And within that 5 years, it might be overpriced, underpriced, or even priced at par. So speaking to that, we have methodologies, we have techniques that we use to estimate what the intrinsic values of these stocks are. Like I said earlier, you spoke to the fact that earnings expectation goes a long way to help us determine this intrinsic value. Now, speaking from a discounted cash flow valuation technique angle. So having said that, what I think is today, it might seem as if Amazon is overpriced. And then tomorrow, that same Amazon might not really change in price and it will still be underpriced relative to the market price. And what causes this? Now, in the estimation of our value for most of these stickers, some of the things we do, right? Some of the methods we follow is what determines how these things play out. Yesterday, I might have reasons to have automated my model, which is the best practices anyways. Automated my model, and then my cost of equity is reading just about 16%, for instance, in the Nigerian space. And then tomorrow, owing to some changes, maybe I'm using the 10-year bond yield now as my risk-free rate. Owing to some changes, the 10-year bond yield fell. And then at that point in time, my cost of equity, one way or the other, would have come down, and then, of course, shoot the value of the ticker upward, the intrinsic value. Mm-hmm. Or, let's say, earnings expectation, right, I had projected 50K, and then at the end of the day, earnings fell below expectation. Indirectly, it's going to affect my model.
That's the key for you there. That's the key right there, earnings. So I'm not going to interrupt you, but it's an earnings story. The stock market is about earnings, nothing more. We can use any metric we want to use, but it's earnings really. Like the point you're making, If it's earning more, you pay more for it. You might pay more for that earnings, but you're paying for the earnings, not the assets. You're paying for the
Very
earnings.
importantly.
That is what.
Very importantly.
Yes, exactly. I want to make sure that people listening are following. I lost my drone. I don't think it's he's gone off. Yeah, I want to make sure people are following. Yeah, and all. So I mean, hang around. Yeah. I'm keeping Mr. E. I'm going to bring him back so we can. But I appreciate what you're saying. Hang around. Don't go anywhere. Did you want to? Yeah, I want to get Malik Kuti in here. Malik, long time. How are you doing, sir?
Fine, thank you, sir.
Long time. What's happening?
Good evening, everyone. So, for me, Mr. E was saying to sell. Yes, if right now it's looking like stocks you have, for example, are making 10 to 40% gain. Of course, if you are looking to trade, then yes, you sell, you keep some profits, wait for it to fall, and then you buy again. Like you said, it's about the earnings, it's about what you're able to make from it. But if you have some stocks, for example, you have bought, and they're already doing negative 40%, I won't sell. I have some like that. I won't sell. It's why it's stock. To start with, you come in with money you can lose. So you don't come in with money you are projecting to say, oh, I'll sell this and then pay that my rent or school fees. No, you come with money you can lose. I have some positions that are down below 40%. I'm going to stay there. If I have more, I'll buy more. Then my average cost goes down. The dollar average cost goes down. Then when I see things like Apple, Tesla, I'll continue to buy. Tesla is around 600 or something now. Good for me. As soon as I have free money, I'll buy more.
But what are you buying?
Okay, so I know that the market would eventually rally. It's always ups and downs. There are the down times. There are going to be the up times. If you take the whole year and you don't have up time, fine. If I have up time before the year runs out and I see the numbers are doing, say for example, Tesla is back in 850, gone in for 900. The position I've taken, I can afford to sell up, chill, and watch it. If it continues to go up, it will look like, hey, I could have waited more, but I'm still holding some position. If it starts falling, fine. If it falls below whatever I sold, I buy more again.
Yeah, the way I see it, Malik, the way I try to explain is this, right? If you have the money in your pocket and you are not paying interest on that money and you have time to wait, I will say get in. Ignore the market price. If you think the stock or the company is going to be here tomorrow, I mean 10 years, and they have a great product, this is the best time for you to get in. You get in, your stock price might fall, you might lose money the first year or second year, but look at Tesla. I'm looking at Tesla right now. Stock is $650. It has crashed, right? Crashed big time. 52-week high for this stock was $1,243.
Yes,
so it's almost 50% in price. But we can't look at the price. We don't care about the price. Let's look at the earnings per share. The earnings per share this year is 669%. 669% is the earnings per share for this year. For the last 5 years, earnings per share on Tesla, 48%. Return on investment for Tesla, 15%. On equity, 28%. So this used to be, I don't buy Tesla because they don't pay dividends. But their PE has come down to 87. It used to be a crazy 1,000. It's come down. But the question for me is this. Do I think Tesla in the next 10 years is going to be a market leader? The answer is yes. Why?
Yes.
They've built China. They've built Berlin. They've built Austin, Texas. They have giga plants. No other EV company has the scale that Tesla has.
Tesla is not just a car company. It's more of a data company. The data they have collected from the cars they've sold and continue to sell.
Which is why they want to buy Twitter, maybe. So if they get Twitter, you can connect your Twitter account to your car account, blah, 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 and they can see lots of stuff going on.
The data Tesla had gathered from autopilot or the auto drive option, no other car company has that.
That's why it's banned in China. The Chinese don't want you to do it. Yeah, because they understand the power.
Even Tesla says you still have to keep your hands on the steering wheel when you put it in autopilot.
Great.
Yes. But the data they've collected already, everybody is still going to be far behind them.
I hear you. Good point, Malik. Thanks for speaking. Go ahead.
Thank you, Ron. And then, you mentioned the last time we spoke, there was the Trove conversation. So, yes, I used Trove eventually, and I'll give you my review. And I used that to buy some MTN shares. At the time I was buying, it looked like it was high, 212. In fact, initially I saw it at 205. And every time, by the time I wake up, the market is closed. I'm like, oh, I missed this. Eventually, I got it at 212. It went up to 247.
Malik.
And it's there. And it's going to be a long ride.
Malik, let me tell you something. I have not looked at the price of MTN since I bought it in the public offer. The only time I looked at the price for MTN when I bought more. When they gave my dividends, I bought more. I've never looked at the price.
By the time I saw dividends for MTN, I'm like, wow, I simply bought my gate.
You're buying Burundi, Rwanda, Johannesburg, Tanzania, Togo, Egypt. When you buy MTN, you are investing in the future of African youth. If you think Africa as a continent is going to grow, the economy will grow, then you buy MTN. If you don't think it's going to grow, you don't buy. It has nothing to do with Nigeria or the price. When their results from Momo come out in 12 months, Nigerians will be shocked. MTN, I'm not marketing them, but that's something you don't want
to. MTN is a product that markets itself.
Yeah, but let's move on. You're very welcome. Hang around, right? You never know. Might call you back in. Never know, sir. I've got DJ. Is that the name? That's Asokabi.
Yes.
Hey, what's up, bro?
Good. Can you hear me clearly?
I can hear you very well. What's up?
Yeah. Very well. It's nice to speak to everyone. Good afternoon, everyone. So I just want to make reference to one of the concerns around investing on the Nigerian Stock Exchange vis-a-vis currency devaluation.
Yeah.
Why it's true that we do have currency devaluation. Before Buhari, it used to be maybe once in every 4 years. Under Buhari, we know what the story is. But I always like to take out the Buhari period in our problems. It is just. Let's not talk politics. We know him every one of us know him. I want to share a data because somebody asked me a similar question and I generated an Excel sheet. I asked him to look at my portfolio to pick an average stock. I asked him not to pick the top ones. He shouldn't pick the top names, and he picked Fidelity Bank. And I did an Excel that, okay, if you buy Fidelity Bank, if your wife gave you 2,010,000 naira and you bought Fidelity Bank in 2010, you would have bought at around, during the year it sold at 2 naira 1 kobo. So assuming you bought at 2 naira 1 kobo. As at May 1 this year, May 1, 2022, if you added no money to that investment, but all of your dividend, you kept on using it to buy more. You take your dividend every year and buy more of Fidelity. Your portfolio will be worth 12,155,005 naira.
You gotta say it again. Summarize it this time. How much did you buy? How much will it be worth? Just say it again. So
2010, if you bought Fidelity Bank, which is a good a good company, but not one of the top names, not one of the great performers, so to say. If you bought with a total cost of 2,010,000 around 2010, May 1 this year, your portfolio will be worth 12. That Fidelity Bank stock, assuming you are investing all of your dividend, you collect your dividend, bought more Fidelity Bank shares. Your portfolio will be worth 12,155,005 naira. That's what your portfolio will be worth.
And this is the point is that the point that when you are investing in Nigerian stock that are small caps, what's the point? Also to land.
So the point is this. The point is in reference to devaluation. In reference to devaluation now, what was Naira in 2010? 153 Naira to the dollar. What is it now? Officially, we know it's 420. Black market, we know it's 590. Let's go for the middle, right? Because if the right people come on board, they will do the right thing, and then things will both sides will move. So let's say 500, right? Yeah. So if you check the return on your investment in Fidelity, vis-a-vis the devaluation that has happened, even under a regime that was like made to destroy your investment. This regime, you can see that you are still in a good place. Let me now shock you with a simulation I did. I said, because he said, the prices are not moving up. I said, when you invest, it's not just about pricing. It's not just about price is not the only thing you check. There's dividend, there's bonus, and all of that. You have to calculate, you have to pull everything together. And I said, let me shock you. Let me do a simulation of the same stock, but same price, 2010. Let's assume you bought at 201. And let's assume, unfortunately, every year, your investment, the price of Fidelity loses 10%. It did not happen. This is just a simulation. Yeah. So the next year, price goes down by 10%. Yeah. But you collected your dividend and reinvested it. May 2022, you'll be worth 6,154,000. So you can see that the argument against devaluation is not good. But businesses, one of the greatest edge, right, to problems around inflation and dividend is also investing in the stock market, because businesses will find a way around it. If you devalue today to 600, or immediately your portfolio looks like it's lost value. Just give it some time.
I mean, you're making some good points about this. This is basic investment we like to talk about, like start early, buy dividend stocks, reinvest your dividends, so you are averaging down your cost of holdings, and then your return basically looks a lot larger. I mean, when I wrote about the book, my book, right? I said I learned about this because I started to buy shares before I even got to university, and there was no internet, there were no computers. I learned about this because the way I downloaded it. I got this Microsoft Money CD, bootleg CD, and I used it. Yeah. And I noticed that when I plugged in, if I bought new shares and I paid the dividends, the share price will fall, my average cost will fall. That's when I learned, if you buy more, the share price falls, which is average costing, right? I learned that there. But now you can go online and you can see simulations like you're doing. This is how you actually grow your portfolio. So it's very good. If you want to share this with me, I will post on Twitter for folks to just understand what you're saying. It's because the gentleman that spoke, Mr. E, he did make some very, very good points about inflation and devaluation, and they are real. The Naira is devalued. I mean, the Naira is now 610. The currency is gone. Like there's inflation. Inflation is officially nearly 17. Food inflation officially is nearly 20. So his points are valid. They are factual. They are checked. But still, in that devaluation period in Nigeria, you can still make decent profit if you buy right and you reinvest. That's the point you're making.
Yes.
I would like to get that information. I'll share on Twitter as well to folks if you don't mind. I would love to get that.
I'll share with you in a little bit.
Sure.
Maybe after this session.
Yeah, take your time. No rush.
Just imagine if you do the same for Zenith or GT Bank. Just imagine if you did the same for the top names. I mean, the big ones now.
Let me
pay mass. They used to pay. I mean, Fidelity up until maybe this year the dividend was very good, but if you strip out 2021 results, the dividend hasn't been great. I mean, the dividend yield hasn't been great. It's been, I'm just speaking figures now, maybe around 5-6%. But imagine all the Zenith and the GTB that have been doing 10% minimum dividend yield every year. If you do that for those ones, it's going to, I've not done the simulation, but
one of my stocks that I like the most, not a recommendation, guys, I'm just saying what I invest in. I love Zenith Bank. The dividend yield on Zenith Bank is crazy. It's crazy high. The price to earnings on Zenith Bank Very, very good. I'll give you guys the numbers pretty soon. But I like that stock because they just pay a lot of dividends and you can just reinvest it back into the market. I like it a lot.
As at today's price of Zenith, the dividend yield, if they pay exactly what they did last year, is 14%.
That's 14% dividend yield. Remember that this is last year. So this at last year's inflation, they beat inflation. So this year, if they then take inflation into account, 14% is not bad because you are getting that as a return and you still hold your stock. And what do you have the PE? Do you have the PE for Zenith?
Oh,
I can get it real quick.
No, I can also pull it up quickly. You know what? Let me give the, since you asked that, let me give the information for Fidelity and then I'll give for Zenith.
Sure.
And if you want for GT Bank, I'll give it. So Fidelity Bank, full year 2021 result, net asset growth 9%. ROE, you know, I said it's not one of the big performers. ROE was actually 11.9%. Earnings yield 34%. Dividend yield 9.7%. Payout ratio 28.5%.
Yeah.
Then yes, there's something that I would like to share with you, Carlo.
Yeah.
AMCON levy for Fidelity Bank was 15 billion naira for 2021.
Yeah.
If you calculate the impact of that on each share, that means that the AMCON levy on Fidelity Bank is 53 kobo per share. Earning per share for Fidelity Bank was 123. Hopefully, we see the end of Emefiele and Buhari. You know, hopefully we see the end, and then we move into a sane environment in which this AMCON nonsense is gone.
This is the thing I'm saying. Go ahead.
So when the AMCON nonsense is gone, just imagine adding that 50 kobo to the earning per share for 2021. Then it will be 76 kobo.
Yeah.
AMCON levy for Access Bank 2021 is much more than the dividend they paid.
What?
AMCON levy for 1 second. Let me just let me do this.
And just so people follow, the AMCON levy is what CBN is charging the banks because they are participating in the Asset Management Corporation of Nigeria toxic asset sale.
Yeah. 1 second. I'm just trying to mine this Excel master.
Take your time.
So let's talk about Zenith now.
Yeah.
So Zenith Bank paid 310 kobo dividend for the whole of 2021. Yeah, 2021, yes. Net asset growth 15%, ROE 19%, earnings yield 34%, dividend yield 13.6%, payout ratio 39.8%, revenue growth 14%.
So these figures are for 2021.
Yes, 2021 full year.
And this is the COVID year. This is the COVID year.
Yeah, that's the COVID year. AMCON levy is 121. 121 kobo per share is the
1 naira.
21 kobo.
Yeah.
37.9 billion was paid by Zenith Bank to AMCON.
Yeah.
Then the one that gets me really upset with Emefiele is Access Bank. So let's go with Access Bank. Net asset growth is 40%. ROE is 15.3%. Earnings yield is 45%. Dividend yield is 10.2%. Payout ratio 22.5%. Revenue growth is 27%. Profit growth is 51%. Earning per share is 4.45 kobo. AMCON levy is 1.17 kobo. Total dividend paid is 1 naira. So AMCON is making more money than the shareholders of Access Bank.
Yeah,
Access Bank investment.
That's crazy. That's crazy.
So
and question is that this AMCON levy is not going to go away with the new CBN. AMCON levy only goes away when AMCON goes away or when those toxic debts are taken off the table. I
think by law, the timeline for AMCON is expired, right? Is this I like to mention his name, Emefiele team that is stretching the role into the future a little bit. It was a 10-year deal.
Right? Yeah, true.
So, and the 10 years is done. We're done with the 10 years, but it's not. Oh yeah, total paid by Access Bank 41.5 billion. last year.
Yeah, this is the thing I'm talking about when I say that. When
if you add the AMCON levy to the earning per share, then you'll be having something like 560 kobo earning per share.
Just on that administrative change alone, not with them just opening up any new branch. Just that admin change alone adds 1 naira to the price of Access Bank. That's what we were saying.
Yes.
And this is the thing I talked about at the very beginning, that just having a change of leadership is 25% points right there on the table across the board for Nigerian listed equities, assets, and all that. Just 25% across the board. The bond price or the bond yield will go down, which is a good thing because we'll borrow less. And I don't want to market for any presidential candidate, but if a particular candidate becomes the president and he says he's not going to borrow to fund fuel subsidy. Right now, we've borrowed 4 trillion to fund subsidy. So imagine if that guy becomes president and says, I'm not going to borrow to fund fuel subsidy. What happens to the naira price? What happens to the budget? Just think about what will happen to the bonds and all that in the country. Then they'll go back right up because we're not borrowing again. The deficit will reduce, the debt will reduce, the exchange rate will get better, because we're not now looking for dollars to go import fuel.
We know 3 of the top names competing to be president.
I don't want to go. I don't want to go there. I'm just.
I'm not talking politics now. I'm talking about when we had the election, right? All of them are going to have economic policies that are going to be better than what we have now.
That is true.
All of them.
That is true.
2 of them are going to be in my opinion, 2 will be very good compared to what we have now.
Yeah.
And then, do you want the P ratio for this?
Yes. No, not really. I focus really for the Nigerian banks' dividend yield.
Okay. All right.
I mean, Zenith Bank for me, if dividend yields of about 13%, with inflation I can eat that. I'm okay with that. I can eat it up and be that. Okay, it's there. It's paid me good dividends. They give that. Look at it this way, right? If the economy improves, which stock should you buy to ride that economic improvement in Nigeria? Which stock should you buy? If I have to give you 5 stocks you should buy if the economy is improved, now go number 1, Zenith Bank, because we have to borrow, we have to issue bonds, anything financial that's going to be there. And when I mean Zenith Bank, I'm talking about the financial sector, but Zenith Bank specifically, right? Then you're talking about MTN, because you have to still talk data. They're a business service enabler and multiplier right now. They're looking at export. They're looking at maybe Presco and Okumo, because they're saying that this new government wants to then focus on earnings and infrastructure. Then, of course, you cannot avoid Dangote Cement. Like Dangote, hate Dangote, he has the skill to deliver cement, and Nigeria's going to need a ton of cement going forward. I wish his refinery and his petrochemical plant were quoted, because if they were, the Nigerian stock market will achieve the same fate in 2020 when it was the best performing stock market in the entire world. Right now, Dangote urea, he's exporting, it's not giving Nigerians urea, but urea in the world has gone 3 times up in price. The guy is making a killing.
Carlo, can I chip in real quick?
Go for it, Mr. E. That's why we are here.
Yeah, I think I like your point that you just mentioned something about Dangote. So Dangote is a moat. A moat just simply means a company where they don't really have, competition like
Correct.
that. They are just the only one. So I love companies like that. And if I were to ever invest in Nigeria right now, Dangote will be a very good company.
You see, with all the inflation and devaluation, you like. This is the point I'm making, bro. This is the point I'm making.
Wait, Carlo. Before I forget, I think his name is DJ.
Yeah.
You made a whole lot of points, and just to clarify things, I'm not saying people should not invest. Don't get me wrong. That's not what I'm saying. Here's what I'm saying. Currently, Nigerian inflation is around, let's say, 17-point-something%. If your dividend, you're not making more than 17% a month. Carlo, please just explain what that means.
That means that you're losing money if your real return is negative, if your dividend is less than inflation.
Thank you. So 1 point. I'm not saying don't invest. I'm just, when I mentioned it, I was just mentioning from the our point of view, because at the end of the day, every currency is still pegged to the US dollars. In as much as what you said made sense, saying, okay, if you invested, in so bank, in 2010, you would have right now plus the dividends reinvested should have been maybe $12 million, which is fine. The question is, what is $12 million today? What can $12 million buy for you today? Inflation is actually eating up that money, hypothetically. Just that's one point. So you can always invest if you like the company. Don't get me wrong. I'm not saying don't invest. Then another thing I wanted to mention to the previous call, I can't remember his name. Just to clarify this, I'm not saying that Tesla is a bad company. No, that's not what I'm saying. In fact, I love Tesla so much. I love Elon. I've been a fan. I have investment in Tesla. What I'm basically saying, I am coming from a point of view where I want to pay a true valuation for that company. There are different ways you can calculate it to know, okay, this is what I think I should pay for this company. I'm not that type of investor that will go and invest. Hey, Tesla is $1,200 today, and I'm going to buy because everyone is buying, and because I think, Tesla is going to have 50% market share within the next 5 years or 10 years. It's fine. Don't get me wrong. A lot of companies didn't survive the dot-com bubble. Where's BlackBerry today? Cisco and so many other companies were supposed to dominate the chip market, Microns and the rest of them. Where are they today? What's their valuation?
So this is why you should buy ETFs or mutual funds in a way. Because if you don't know, like DJ is quoting figures, you don't know figures, you don't want to know figures, no problem. Just go buy an ETF, an exchange traded fund or an equity mutual fund, which means that you're going to give your money to a manager, and that manager will then buy you all this stuff that DJ and Mr. E are quoting. For instance, I personally like VTI. You can Google VTI or Google VOO. VTI is about...
Even SPY.
Yeah, let's just do VTI. VTI is sold by Vanguard, right? It's nearly 5,000 very, very good US companies. Microsoft, Tesla, Berkshire Hathaway, Apple. You buy with $25, you get exposure to about 5,000 US companies. Expense ratio, very, very low. So the way you play the US market, right, is to buy maybe an ETF or an index mutual fund, and you just do it every month or every week that you have money. You have 5K, buy VTI or VOO. I like dividends. So I buy property in America, but I don't buy the property. I buy the residential and commercial. I buy ARR and I buy ARI. That's Apollo Residential ETF and Apollo Commercial ETF. So I get those guys and they're buying, I'm buying them all. I'm buying homes in the US. That's how I invest. I don't want to go and do the individuals. I can if I have the time, but if you don't know, give your money to someone that knows. VTI, VOO, QQQ.
Just to highlight what Carlos said is very, very important. Oftentimes when we tend to chase, single stock, to me, ETFs are like one of the best you can invest your money in. That's a very true analogy. The second part I want to mention, I think, is just basically, overall, if you love a company, invest in it. It doesn't matter whether anybody's
Mr. E. I pulled up Starbucks because of you. I hear you, and I think it's good advice. But I'm just telling people always say...
Where I'm trying to get at, before I forget my point, is look at it this way. Now, an iPhone today, if you go to the market, an iPhone is what? I'm just giving an example, is worth $1,000. That's what we think an iPhone is worth. That's what they're saying, hypothetically. Now, would you go pay $1,500 because iPhone is scarce, or because you think that within the next couple of years, or that same iPhone 13 is going to be worth $1,600? That's basically what the stock market is all about. If you think the next 5 years the company is going to be worth this, and you want to pay the present value for the future value, that's fine. I want to look for companies where they have a good finance, probably modes. Then I want to buy that discounted value. That's the truth about it. And that's why I've been sitting on a whole lot of cash. To be honest with you, I sold a whole lot When I saw the market was overvalued, I sold a whole lot. So I'm just kind of holding, and I'm still holding. To be honest with you, I'm also shorting some stocks. That's the truth about it.
You're a sophisticated investor, Mr. E. But I want to break it down so I understand what you're saying. When you look at the stock price, guys, when you see a stock price, the stock price is $50. What that $50 means is this, that the market is saying that forever and ever and ever, all the future earnings of that company, if you bring it from the year 5000 BC back to today, is going to give you $50. So you want to ask yourself, is the market correct? Have they overpriced or have they underpriced this company? If the market has overpriced the company, meaning that the company, that $50 you see is too expensive, then you sell it. You short. You sell it because eventually the real value and the price equate. So you've made money. But if you think the price the market is quoting for you, the market has undervalued it, then you buy. Because eventually in the long term, the value and the price will equate. That's investing for you. Don't make it complicated. You look at the market price and you ask yourself, is the market overpricing or underpricing at this market price? The market price, it means nothing more than what the market is telling you. It has no basis to the value. It has no basis to reality. Bankrupt companies can have high market price, and good companies can have low market price. Remember that. Hey, my brother, come in, Mr. Baba 23. How you doing?
Good. I just wanted to say hello, and then I heard Mr. E speaking earlier.
Mr. E is a troublemaker. I don't mind him.
No, I'm a troublemaker too, I guess.
I hear you guys. What's happening, Mr.? I have you here, Mr. But what's going on in the crypto space? Walk us through what's happening. Tell us what's going on.
So I think the currency printing that has happened in the US, where we increased our M2 money supply by 40% in the last 2 years, that's really wreaking havoc on the markets. People are chasing equities, real estate, and all kinds of assets with this extra cash that has been doled out. So I think this is where you have to be really careful with the equity markets. I would agree with Mr. E that because of the currency printing, some of the equities are overvalued, and then even some zombie companies. Oh, DJ, thank you.
Yeah,
Can you mute real quick?
I don't unmute you. Go ahead.
And then, I think they've been overvalued. So you have to be really careful when you evaluate a company. Yes, definitely look at the PE ratio and analyze that before you get into companies. Just don't go with the hype because there's a lot of hype around different stocks, and you really have to evaluate. And I would say equities, maybe they were overvalued 15 to 20%. And this is where we're seeing the true value coming back to the market. And then, our high inflation print, they have to increase the rate to get that under control first.
Yeah.
And for the crypto, I would say I just usually focus on Bitcoin itself, which I think is the true innovation in the crypto space. And I would say Bitcoin is a thing that is undervalued right now.
It's $17,700 now. Bitcoin 17,770 right now.
Can I share one thing up in the nest, Kalu?
Go for it.
Mayor multiple is a great thing that I think we can all use to evaluate. I think it's not just for Bitcoin itself. You can use it for any kind of equity.
This year. Yeah.
So I just put this up at the top. Maybe we can look at it together. Are you guys able to see that in the nest?
Let me look. Yeah, because everyone's asking what's happening to crypto. Is it going to crash? I mean, should we buy? Blah blah blah. It's 17,000. When I started buying crypto, this was when did I start buying? About 3 years ago. The price was 16,000, and I was like, wow, 1694, so I can buy more. Then it went to 17, 18, 19, 20, like that. So from 16,000, it went all the way to 69,000. Now it's back at 17. When it gets to that 16, I'm going to buy again just for the heck of it. But that's when I started to buy. I'm a Bitcoin I mean, I just started yesterday. So
that's good.
Yeah,
this is
it's
great. So if you see the top there, so the Mayer multiple right now this is taking the 19,000. So basically, it's a very simple formula. All you do is take the current price of Bitcoin divided by the 200-day moving average.
Oh, I see what you're saying.
So it's at 0.46. Anytime an asset, if it's a good asset that you've evaluated, everyone needs to evaluate this. Spend 100 hours to learn about Bitcoin first before you put any money in. But if you find a good asset, and if it's under 2.4 Mayer multiple, it's a great time to buy. And since this is at 0.46, it historically has been higher 98.26% of the time from the past. So this is where I would tell everyone just to click on that MayerMultiple.com and just read about it a little bit.
So Baba, just to be clear, right? This multiple now is 0.46, and you are saying whenever it's higher by 2.4, is that a trigger to buy? What make it very simple, just so people following can get it.
Sure. So this is where the lower the multiple, the better the buy.
Okay.
So right now we're almost close to 19,000 divided by the 200-day moving average is 41,000.
Yeah.
So whenever you get anywhere less than 1 is definitely a great time to buy, and even up to 2.4 is when you can continue to DCA into.
Gotcha.
When it goes above 2.4, maybe you can slow down your DCA and hold back for it to, again, take the dip, because, everything goes in cycles. So this is where, historically speaking, Bitcoin has been only lower than this price point, less than 2% in the history. So this is where you see that this is a great opportunity to, once you learn, to just DCA into Bitcoin, or maybe do it. And then I think one thing I would just point out is one thing that's upcoming, a deadline for GBTC has applied in the US to convert to a spot ETF.
Yeah, but they've DeepSeek, the second you listen to them.
And this is where I think July 6th is the deadline. So, BlackRock and Vanguard, these big institutions have a lot of pull with the SEC. And they will probably try to pull them to try to approve this spot ETF so the big institutions can buy at this low price point.
Oh,
so that's one thing.
I see what you're saying.
This is one thing that we have to keep an eye on.
So the big boys want to buy at this low price. So they will try to put pressure on SEC to approve the spot ETF to buy Bitcoin. And then,
yes.
Okay, I see what you're saying.
Given this low Mayer multiple and the window may close, I'm not saying it's going to happen.
Yeah.
But if you see the game theory in play, if that happens, then a lot of the big institutional money will come in. And then I see whenever that happens, I think the Bitcoin price will go 3 to 5x from wherever it is at that point.
And this Mayer thing, because it's over the 200 moving share price average. So it's essentially taking, what is the methodology behind it? What's the thinking behind the Mayer multiple? What's it trying to say? Like, I know what the PE says. What's Mayer saying? I see it looks like the market price over the 200-day moving average. Is it like an MA? Is it what it's doing?
It's just saying that whenever you're less than 1, you're basically under the 200-day moving average.
Oh, okay.
And then, we all know that any stock, you can actually use this Mayer multiple for any equity or any ETF. You can use it for anything. So this is where I think it's a good indicator to just read about.
Yeah.
And then it gives you an indication if you're DCAing, if it's under 1, I would say, maybe increase. If you're doing like a DCA into something $100 every month, maybe bump that up to 200, right? And then you can, when it goes above 1, then you can pull back to your regular thing. So maybe you use this as like a indicator when you should, whatever you've evaluated, if you want to do a little bit more, especially when it's at this 0.4. I mean, it's actually even better, right? Because you're saying, let's calculate that right now, what it is. We can do
it's better. If you just use 18,000, I guess. It's going to be low. Yeah, okay, 18,000 will give you a, Ikechukwu, I see you're going to be next. Just hang it there. Ikechukwu, you're going to be next, and I'll bring DJ back.
Yeah, it's 0.439. So I would say it's like getting close to It hasn't been better than like 1% of the time. So
but this is of course, if your risk appetite is high and you are okay with investing and even losing, you should take the mayor as a secondary validation of your due diligence and research, more or less. Yeah.
So I think this is where I think if everyone puts in the time with Bitcoin, not crypto, I would say be careful with crypto. If you put it in, then you will see that this is a low risk, high return asset, which is undervalued versus, equities, everything is overvalued and it's coming back down.
Yeah.
But Bitcoin is like treated like a risk on asset by these big companies. And whenever they get liquidated, they need money, they have to sell their Bitcoin to cover their shorts.
That rotation is what's happening, right? That rotation.
So leverage is bad. Be careful with leverage, please.
All right. Thanks, Bab. I mean, hang around. This is great information on that market space for us. I think we're all genuinely grateful that you were able to break it down and give us a tool for us to analyze going forward. So thanks for that. Ikechukwu, what's up? Thanks for waiting. Kindly unmute. Let's hear you out. What's happening, bro?
Okay. First of all, I wanted to talk about discussion we are having.
Oh, sorry.
He was saying that you can sell maybe your stock or any of the investment at a particular time, especially now when you can sell and look for other stocks and the potential.
Yeah.
I was saying that if that is strategy, investment is all about strategy. If that is the strategy, it's not really a bad idea, but it's a bad idea to sell a particular stock when it's redeemed. It's a bad one. The best time to buy is, and if you want to sell, let's say you are a trader, you can sell when the stock or anything is skyrocketing. So, but there's something you say I wanted to look at. You are talking about selling, let's say you bought a stock now and you have a target of selling in the next 10 years or maybe the next 15 years. And I was thinking about it, the stock for example, let me just use Bitcoin. Bitcoin might be able to do well this year or maybe let's say next year. Bitcoin's all-time high will be around $100,000. You might come in the next 5 years and this all-time Bitcoin will be around $50,000 and not $100,000. So I was saying it's better you have a strategy of any stock you buy in so amount, I will take my gain. Instead of saying in so years, I will take my gain. So that's just the contribution I wanted to take.
I think they're very correct, and they're two very, very good ones. Like you said, first of all, Mr. E sounds to me more like a trader. So he's very correct in like, hey, buy, sell. So if you're a trading guy, yes, you want to get in, get out, make your mark, move on. That's trading. But I'm more like a longer term investor guy. So for me, it's like if you start to invest, you want to make sure at the very beginning, you ask yourself, what is your objective? How long do you want to invest? How much risk do you want to take? Once you get those 3 questions locked down, then you try to match your objective. You invest according to your objective, not the returns on the market. So if my objective is to save for my retirement, that's how I'm investing. I don't care about the market price in the short term. I'm looking to build up my accumulated asset base for 10, 15 years from today. The market goes up or down, doesn't mean anything to me. I DCA my purchases, I hold and I reinvest my dividend. That's where I'm going to with that.
Okay. Well, that's your strategy. Just like I said, all this investment is all about strategy.
Very correct.
Your strategy of maybe getting your dividends or your profit invested and just don't is a good one. Although most people in crypto, like I'm in crypto that is stock, I'm just getting the few lessons of stock and still learning about stock. But most people in crypto look at the target rather than this.
That is true. It's the same on any asset class. If you are trading, You are doing momentum. You are doing your MAs, your oscillators. You are saying, what's the MCI? You want to get in, get out, take your return, run away, come back in. That's fine. I think we're both correct and saying the same thing. But if I'm a long-term guy, when you buy and you sell, you are paying expenses to the stockbroker. Remember that. Anytime you buy and you sell, you are paying your broker. Why pay your broker? If I believe that Tesla is a good stock, buy it and hold it. Why are you selling? Sell for what? If you sell, to buy what? So it depends on what your objective is. This is the point I'm making. If my objective is to make money in 1 year, then I can buy and sell even in 1 day, 5 times, become a day trader. But if I am looking at building a retirement portfolio, I want to buy a good stock that pays dividends, reinvest my dividends, and just hold. I think no objective is right or wrong. It's make sure it aligns with your risk profile and your objective, and then you're fine. That's what I say.
Yeah. I would say I'm with you, Kalu. I'm like an investor also. And this is where I think we can all be investors, but traders are a very small group. Less than 1% are actually good traders. So everyone should be, 100% can strive to be a good investor, but trading is very hard.
Yeah, it's a tough call. It's a tough call.
Just
Yeah.
to chip in,
Yeah.
Carl, sorry.
Go ahead.
My name was mentioned.
Your name will always be mentioned, Mr. E. So that's not. So you just know that.
I'm not. Just to clarify things. Number one, I'm not a trader. Number one. Number two, all I am saying, I'm not saying sell when you're losing. No, I think I'm coming out like a lot of people are not really understand. So,
Mr. E, I don't think you should worry about. I think the important thing is let's communicate and learn. I don't think people are.
I'm getting off. Let me just make this point. Yeah, this is just for everyone. The most important thing, ETFs, SPY will always outperform the market. My best advice to people, invest in ETF. SPY is a very good one, or any of the ETFs will always do well in the long run. That's number one. Number two, I'm not saying sell when you're losing. This is where I'm coming from. If I bought a stock that I know is overvalued, I bought it at $1,000, and I see that, hey, next week I'm down 20%, and I already know the inflation that's going to keep increasing the interest rate for the next couple of months. What that tells me in common sense is, hey, that stock is still going to go down additional, maybe 20, 30%, because interest rate is going up. Now, what we are coming from is I'll rather sell at 800, wait for it to go down at 500, then buy again, rather than just waiting for it to drop down. And, that's where I'm coming from. I'm not saying sell. I'm just coming from a point where you always have to follow the news. Look at what's happening. Very, very important. Don't buy stock because everyone is buying it. Always follow the news and know what's happening.
Good point, Saeed.
I'm not saying that Mr. E, you are correct, but look at it. Most times you can't determine how the market is. You might be expecting a market maybe to drop down to $500, and the market will skyrocket.
Yeah, you have a point on that. You cannot really predict the market. But Carlo can also testify to this. They are basically predictions, and I'll explain to you what. The previous caller, very, very smart guy. I was trying to follow him, but I can't find his name, the one that said something about Bitcoin. Now, anytime the interest rate goes up, go back and check the chart. What happens to Bitcoin price? It drops. Some of those predictions are very common that you can predict it. We all know that once the interest rate should go down to 0% or even 1%, what's going to happen to the stock market? Everything is just going to go up. We already know that. So you already know within the next couple of months, the federal government, the Fed just increased it to 75 basic points. We know another 50 or 25 basic points is coming for the next couple of months. You already know that there's going to be stagflation. So this is not even the time for you to assume that everything is going down. That's the truth about it. So we know unless the Fed or the SEC will come in and say, okay, for the next couple of months, we're going to leave the interest rate at maybe 3 or 4% and just hike it there. But if the interest rate keeps going up, the stock market will contract because we overpaid for it, and now we're going back to the true valuation.
But Mr. E, I agree with you, but remember that we always overpay for stocks. We've never underpaid for stocks. Stocks are always, correct. That's why if you look at the PE, you never see a PE of 1, 2, 3, 4.
Kalu, you're correct about that. But all I'm saying is I would rather try and pay. And there's no way, you're correct. We're always paying for the future value. But paying for the future value does not mean you pay 100x. You get what I'm saying? So paying for the future value, if I look at it and I say, listen, Tesla is going to dominate. They're going to own probably 50% of the market share. As if Ford doesn't catch up with them or Rivian doesn't catch up with them within the next couple of years.
I hear you.
I will say it makes sense for me to pay 900, 800 for Tesla today. You get what I'm saying? But that does not mean because I want to pay future value or would be 2,000 for Tesla today. It doesn't make sense. You get what I'm saying?
Yeah.
Because I look at it, always look at the projection, look at the financial statement, very important, and say, how many cars will Tesla make from now to the next 5 years? Look at their other competitors and say, okay, how many would they take? Are they going to own market share for like next 5 years, next 10 years? Yes, they will. But also look at it, how much do you think you want to pay for this particular stock? How much do you think the stock is worth? Yeah, you always overpay. So Carlos right from that. Thank you guys, I really appreciate it.
Thank you so much, Mr. E. Appreciate you.
Very, very nice followers, and I appreciate very intelligent people.
Thank you, sir.
Good talking to all too. I'm just going to step down too.
All right, guys. Thanks. Appreciate you guys. Welcome.
Space.
Great. Mr. DJ. Hey, DJ, what's up? Get your hands up.
Yes. I just want to follow up with a question and I believe this question is good for everyone. If I'm in the US and I'm invested in Nigeria, should I worry about inflation or devaluation? And if I'm in Nigeria and I'm invested on the Nigerian Stock Exchange, should I worry about inflation or devaluation? I just feel I can speak to it, but I just feel that it's a good question. That
it's always inflation. It's always inflation, DJ. Always inflation.
But always. If I'm in the US, right, and I'm invested on the Nigerian Stock Exchange,
yeah,
I don't live the inflation, right? I don't buy products in Nigeria, right?
Yeah.
I'm just investing on the stock market.
Yeah.
But if I live in Nigeria, right? Inflation affects me directly because every time I go to buy something, rice, pay for rent, and all of that, I experience the Nigerian inflation, which is about 17% if I'm correct.
Yeah.
However, devaluation affects me if I'm in the US, right? Devaluation is my concern because if there's a devaluation, then the value of my money, and all of that. So I feel that if you're in the US and you're invested on the stock exchange in Nigeria, your concern should be devaluation. And I feel if you're in Nigeria and you're invested on the stock market, with respect to your investment only now, inflation should be your concern. I know that devaluation affects the things you buy in the open market, but with respect to your investment is my focus.
I look at the way it's tied. I think it's tied in this way. If I brought $100 to Nigeria, that means I'm going to get from black market, right? I'm going to get, let's just say 600 Naira. So I take my 600 Naira and I buy maybe 2 shares of MTN. So I've done dollar to Naira to MTN, $1 to 2 MTN shares priced in Naira. If the Naira devalues, I can still do that same $1 and buy 3 MTN shares. So the more there's devaluation, the more I can buy more MTN shares in Naira. But what happens with inflation is that when I'm going back the other way, if I sell my 3 MTN shares, can I still buy $1 with inflation? No, because if the dollar has gone up, I now need more MTN to get that same $1. So it depends on you're right, it's the direction you are looking at. If you're coming into Nigeria, you want a lower Naira because you can buy more MTN. But if you are leaving Nigeria, what do you want? Inflation is going to affect your Naira that you're going to buy the dollar. That's the thing. So Nigeria offers you can go to Nigeria to the FMDQ and fix the dollar rate you want to take out of Nigeria. You can buy a forward from Nigeria and you can move that risk entirely. So if you do it the proper way, you want to invest $500,000, you can actually go to a bank, do capital importation, and buy a forward, a US dollar forward, meaning you can buy currency for 2 years ahead of time so that you eliminate any interest rate exposure that you might have if you are taking a dollar out of Nigeria. So you can't avoid inflation at all, but you can avoid devaluation. That's the way I'll summarize it out. Yeah, I mean, Daramolayo, I am Regal. What's up? Thank you for waiting so long. What's on your mind, sir?
Hi, good evening, everyone. So sorry for drawing us back a little bit. I don't know if you have any analogy for, I don't know how to say, maybe any analogy to encourage people in buying more of the MTN shares, because I bought mine too originally when they started selling as a December, and I'm really, really happy with the thousands of units I got myself. So I don't know if you have any analogy that we can use.
I mean, it's
in order to liberate themselves.
First of all, remember that it's not advice, right? We're not advising anyone to buy anything. We're just saying I'm only talking MTN because I bought MTN. So I'm talking about my experience, right? I'm not advising anyone to buy or sell anything. But I would say this, right? It's very difficult to find a good company with a good strategy that is poised in a growth sector. So you can be a good company, but in a bad sector that's not growing. You know, you could be in a bad sector, but have a good company. But MTN, I think, ticks all those 3 boxes. It's a well-run company. It's in a growth country like Nigeria and Africa, and it's in a good sector. Anything you see in America today, Netflix, Snap, if they have to come to Africa, one way or the other, they're going to have to come through MTN, one way or the other. Even Starlink, one way or the other, might have to come through MTN, because MTN is building the infrastructure. That's why I keep on going back to this point. MTN, Airtel, they are a play on Africa. You know, before we used to have Africa Rising. They will say Africa has the lowest age in terms of population, and the countries in Africa are really poised for growth if we can get our act together. So if an Africa starts to now, in the next 15 years, the middle class in Africa is rebuilt and starts to grow, who will benefit? MTN. That's the point. You want to be in a company or in a country that is going to grow. So it's not really, I'm not suggesting go buy MTN, but I'm saying they are poised and they're in the right place to participate in future growth. That's for me. If you don't like risk, don't buy them. Don't let anyone to force you to buy them. But if you want to invest, I say that's a very, very good company that you want to take a peek at. Yeah, that's what I'll say. Eniola, what's up? Eniola Sobimpe. Oh my God, I can't pronounce that. Can you hear me, Eniola? Your mic is off. You want to go ahead and speak? Can you guys hear me though? If anyone can hear me.
Clearly.
I thought I took
Yes, we can hear you clearly.
Sorry, guys. Yeah, I went mute a while ago. So, Eniola, if you can hear me speak, or I'll let Big Chief come in and then you can speak. Big Chief, you had your hands up?
Yeah, pretty much. I was trying to speak to what DJ was speaking to earlier.
Yeah.
And then, of course, to itemize some things that I think are important, right? Especially seeing the topic of discussion for today.
Yeah.
So pretty much, I think inflation is personal. I think the Nigerian Bureau of Statistics publishes something that seems to be like a weighted average. I mean, they use last 5 method, obviously it's the form of weighted average of the price movements in Nigeria.
Yeah.
But overall, right, I think when you are planning investment, you should particularly look at your consumption, look at how the prices have moved over time, and then, of course, find a way to estimate what your own inflation reality is, right? And so you won't be trying to fight the market negative return when your own negative return is in the real sense wider. Mm-hmm. That's one of the very important information that I try to pass, so much that you won't have illusion of managing negative real rate of return properly when in the real sense you are not. And I will set an example. Assuming I wanted to get a TV last year, and it cost just 100,000 to get it, right? In the real sense, that TV might be 180K this year. And then, of course, the Nigerian inflation statistics is pointing to just about 17.71 thereabout. So the point is, it doesn't mean the figure is wrong, but it means that my reality particularly is different, and I would have been better off buying that TV last year compared to now.
I think it's a good point to make on it. I think it's a good point that we don't make enough that inflation, right? A good way to avoid inflation is to avoid holding cash. If you don't hold cash, then inflation has very, very limited ways to attack you. That's one thing again that we should have to point out. I mean, I always refer to this song by Fela, and I'm going to write a book on that song. You know, where he talked about this guy trying to buy a fan, and he tried to save to buy the fan. Let me just make a point there. If you live in a high inflation country like Nigeria, you should not try to save to buy an asset. It's much better to borrow the money and buy the asset. Especially if the asset is an income generating asset. Let me say it again, right? If you live in a high inflation environment like Nigeria, don't try to save to buy an asset. It's better to borrow, immediately buy the asset, then pay back the rent, the interest, because the interest is many times fixed. So when you are paying back the interest will not rise as fast as inflation. So if you want to buy a microwave and the microwave is 100,000 naira, if you try to save 20,000 naira every quarter, you will not get 100,000. When you get 100,000, the microwave has gone up in price to maybe 110,000. So you've lost your target. But if you borrowed the 100,000 and bought the microwave, you'll be paying maybe your rental, maybe your APR, maybe 10,000 a month for 4 or 5 years. But that rate is growing slower than inflation. So that's how you want to use inflation to your benefit. Don't try to hold cash. If you have money, buy a bag of rice in advance and keep the bag of rice. Rice doesn't expire like that. So it's a way for you to beat inflation by converting cash to commodities or assets. That's how you beat inflation, which is, I think, the point CJ is making via other means here. All right, CJ, thanks a lot. Eniola, hi. You can unmute you, and then let's hear what's up. Hello, Eniola. Can you hear me? You can unmute and just go ahead, and then we can hear you out. All right, so guys, let's just reset the room. We're talking about markets are down. What should you do? And we started by talking about the entire global market. We talked about the US market. We said at this time, stocks are down, bonds are down, Bitcoin is down, even property is down. Usually, when you have stocks down, bonds are doing well, so you run to bonds. Or you have bonds doing well or bad, and then you run to stocks. Right now, everything is down. And we say that also there's an inflation risk in the market. So we can't even just hold Naira cash in our pocket and say we want to wait out the market. If we're waiting out the market, inflation is taking its toll on our money. So that's one thing that's different with this market. So I say, what should we do? And we sort of arrived to the conclusion that it depends on your strategy, right? If you're a longer term guy, you want to basically ask yourself, are the assets you're holding, right? Will they still be valuable in terms of earnings in future? If you are holding a particular stock, right, will the earnings of that stock still be coming in 5-10 years? If the answer is yes, then why are you actually taking action? Why are you selling, or why are you trying to make a move to exit that position? You might want to hold on to it. The only time you should seriously consider selling is if you have taken margin, if you have borrowed to buy an asset. There you are now on the wrong side of the market, because now you are paying an interest cost that is rising, but the value of your assets are flat or falling. That's when you want to take immediate action, because if you are borrowing money to buy an asset, then you are in the wrong game. But if you already own assets that you own and you are buying them without margin, then you want to ask yourself, what's the rush? Like Warren Buffett would say, the stock market exists to transfer money from the patient to the impatient. So that's what I want to make sure you guys get that key point from us.
Yeah, pardon me, I was shut out for a moment there.
Oh, sorry about that. Go for it.
Yeah. So, like I was saying, I try to emphasize the fact that inflation is actually personal, and it should not be treated as something that can be treated homogeneously. Let me put it that way. Like, oh, this is some blanket inflation rate. The reality is your inflation rate as a person, looking at your consumption and the things you are probably exposed to consuming, might even be lower than what is obtainable generally, right? For most of the time, we see that it is usually higher when I sit down with people to help them plan this kind of investment. Now, also, I have seen a lot of us have this conversation over time. I think the idea of robot trading, amongst other form of system of trading currently in the world, is putting us in a place whereby a lot of people are thinking, or perhaps they don't even know that they have advisors that are supposed to guide them in their investment moves, right? I heard my good brother DJ speaking earlier about the fact that Fidelity had moved powerfully over time. But what is also important is that at some point during that move, right, there was some movement that was so discouraging that a lot of investors would have just sold off. Imagine you are down 70%. Right? So the point is, if you have an advisor, they put you in a frame of mind where you can beat the market. And that is why we are all here, right? So we could get information that will enable us to achieve that. Now, for instance, in December, right, we were having some conversation, we had a space, and then we were talking about navigating uncertainties among other things. We had a call, so to put, and we're talking about navigating uncertainties. And one of the calls that one of the analysts made on the call was the fact that, oh, guys, if you are exposed to the US market, this might be time to take profit and then perhaps chill a little bit, trading in other markets. And everybody was saying, why so? So I decided to do my finding. And I found out that the Fed have been giving guidance since about September that they were going to do, they were going to stop asset purchase. They were going to have to sell some back into the system. And then, of course, they were going to hike rate. And now, historically, right, especially for those kind of markets that have some level of efficiency in terms of information, how information influences the market, you would see that when they hike rate, especially significant hike like a 50 basis point hike like we have seen consecutively now, what you will see is that investors will sell up their position. And then, of course, there's also the concern of business cycle. So it's a whole lot of things.
I hear you, Big Chief. And I like us to use words that I want to follow, so people following can actually follow up. So essentially what you're saying is that the Fed is going to make money expensive, right? And once money is expensive, it causes companies to raise prices or to pull back on operations, which means that companies lay off employees. And then, of course, people don't have a job, so people can buy luxuries. And if people can buy luxuries, and the U.S. market is 68% personal consumption, that causes the U.S. markets to crash.
Yeah, exactly. Yeah. And especially when it's a credit-oriented economy like this, right, where people use credit cards and the likes, and then you see the charges on credit cards surging by the day. And then, of course, consumption is hampered. How? Because people cannot access that kind of money. So when they are not able to consume, what you now see especially is that aggregate demand starts to slow. When that slows, companies start to retrench people because they are not making sales like they used to do. So indirectly, right, we start to see some kind of contraction in growth like we saw in Q1, right?
Yeah, and again, if the US falls, what happens to remittances to Nigeria? It will fall, right? Again, right?
Practically, it should be impacted, but I've not charted those data. So
there's no data there. If the US goes into recession, remittances to Nigeria will reduce, because if I don't have a job in the US, why would I send money home to Nigeria? It will chill for a while till I can pay my mortgage, right? If the US goes into recession, Europe will also go into recession. Japan is already in a deflation, but their exports will be limited. We already have Russia, Ukraine. So you can actually see that if a recession in the US happens, the US used to be the only growth large market in the world for a while. China is still doing COVID in and out and all that. That it might be a big blow to countries like Africa, where we have high food now because of the Ukraine war. We then have a recession with less remittances. That might be a double blow. So these things we're saying, it could happen. It could happen. We have to start to ask yourself, what is our plan? What's your plan B? If dollar gets to 900 naira, what would you do?
If it indeed allows to float, I think it should be trading around that region now.
Yeah, then what would Nigerians do?
Pretty much, we are going to have a lot of problem actually. Like one of the speakers spoke earlier, one of the issues we are going to have is actually importing inputs like the brown sugar from Brazil, like the wheat from Europe now. We know Russia and Ukraine has issues, and they supply about 35% of the global exportation of wheat. So I'm just saying, like, issues around food, right, will really be affected. And when that is affected, don't forget, our problem is even a double whammy now, if you ask me. I mean, it's from two sides. We cannot reasonably produce for local sustenance internally. Insecurity, infrastructure deficit, amongst others. I mean, if you want to move an item, like I found out like about 3 years ago, you want to move an item from Maiduguri to Lagos now. Maybe something was made in one farm in Plateau to Lagos. You're spending more than 500K to do that.
Yeah, I mean, it's crazy. Yeah, I mean, I hear you. It's crazy. The issues are there, and like I said, everything in Nigeria depends on elections. Because even 2007, 2008, we had the global recession caused by the subprime market crisis. Nigeria is one of the few countries where our local currency did not crash. The whole world crashed. The Naira, Google it, 2007, 2008, our Naira actually gained value because we had very, very good managers. I think that back then, Charles Soludo was the central bank governor. So whilst you had that economic recession, the Naira did pretty well. At the point, Soludo was actually boasting to people back then that go and sell your dollars because you're going to lose money. Soludo used to boast and tell people, go and sell your dollars.
I mean, that was when we had an economist as the chief banker in Nigeria, isn't
yes, it? Exactly.
Like I would like to quote here now. I was seeing
very interesting comments that you're making. I just wanted to
if you were not an analyst or in the market as of 2007, 2008, you pretty much are not a properly trained analyst, because that global economic issue then actually taught a lot of people some good lessons that they currently are using during this current upheaval that we've been witnessing, and to great effect.
I agree. No, Big Ch, I'm going to make you round up. I want to get some guys in here.
Okay, pretty much. Let me just quickly round up. So from where I stand now, I think investors should particularly be planning their portfolio towards a recession. That's all I would like to say.
Crazy, man. Recession. I hear you. Eniola, what's up?
Hi, can you hear me now?
I can hear you now, yes.
Okay, sorry about this. So I was caught with something else. So yeah, I think I just start from where Big Shift ended, like we should be preparing for recession. But before we go deep into that, so let's start. We are talking about markets are down. What should you do? So the question is market really down? I think that's the first question we should be talking about first. So I'll be talking about that in like 3 ways. Like, okay, why are we even here in the first place? And then what is going on in the market? So I think one thing you should know is this. Maybe before I go deep into that, I should say this. Anything I'm saying here is outside of my internal knowledge because I work in the financial system. So this is very, very outside of my internal knowledge. This is something you can find on the internet. So the thing is this. The market hates uncertainty. Like if there's any single uncertainty in the market, so the market will behave negatively whenever there's uncertainty in the market. And there are 3 ways where uncertainty came into the market, and which is something we've been talking about, which is inflation, interest rate, and recession. So inflation is good, but too much of inflation is bad. So when we're talking about inflation, okay, it means everybody's happy money is flowing the way it should. But when we are getting to a very top level of inflation, which is currently where we are right now, that is where the market start misbehaving somehow. And then that is where the federal government, the Fed, starts using a scenario whereby they hike the interest rates just to slow down the economy. So anytime there is an increase in interest rates, it means there's going to be a slowdown in the stock movement or any growth stock or growth asset movement. And then we talk about recession, which is the third thing that is actually can put the economy in a very, very bad thing. So one thing we should know is this: United States has a negative GDP for the first quarter. So which means, and then for a recession to be calculated, we have to be like a 2 consecutive negative GDP. So the second quarter report will be out very soon, I think in mid-July or ending of July. And then, so right now the market is very uncertain about the position of whether we are going in a recession or not. But I want to add to this point is that, okay, even though the interest rate is going up, that is still not affecting inflation. The idea of raising interest rates is to like, okay, let's slow down inflation. But according to the CPI data that came out on June 10 for the May month end, we are seeing a 0.3% increase in inflation, which means there are two things that's going on right now. There's a high possibility of recession is coming, but there's also a high possibility of stagflation. So because oil and gas is going up, food are also going up. So Russia was contributing like 30% to the current situation in the economy right now. So the question is this: if we go in a recession, are we going a soft landing or a very hard landing? So I think everybody right now should be preparing for recession. I will say that because
how should we prepare for recession? Do you have a tip for us?
Yeah, sure. To prepare for recession is this: I think there are things going on in the market. Is that okay? In a recession period, currently, what are the assets that are going up? I will say oil and gas and then food. Those are the two asset sectors that are actually going up right now. And then tech companies does not do well in recession. I think that's one good thing you should know, that tech companies does not do well in recession. So if you are having a tech exposure and everything like that, I'm trying to avoid mentioning any stock or anything that will land me in trouble. So I'm making sure that I'm actually being as big as possible. So one thing I'm saying, if you want to prepare for recession, is to go back into the market, look at the market ratio and see what are the asset sectors that will do well in this recession. That is,
That's what we're asking you. That's what we're asking you. Which you have to give us we like to make it very, very simple, right? So we're listening, we're saying, hey, there's going to be a recession. Okay, so what should we do?
If you want, when there's a recession, I think at that time, cash rules, right? Like you want to hold enough cash.
Okay.
Because that is one thing I should tell you. You want to hold enough cash because you don't know what might bounce on you. You might get laid off.
Good.
You might something else might happen. And then two is that, okay, if you have an excess cash at hand, the other thing you want to look into is that, okay, what are the potential in the market right now? For me, I would say energy should be a right potential right now because the thing about energy right now, especially oil, is that nobody knows what is going on. So United States is begging Saudi Arabia to increase their output so that global thing will go up and everything. But the question is, would that be sufficient?
So I hear you. So I hear you. Hold cash. Good advice. I've written that down. So more or less, like be flexible with cash for opportunities and all, like just lose our job, that kind of stuff. That's good advice there. Any other succinct advice out there?
Yeah, I think holding cash is not even enough. I think you want to look at high savings accounts that you want to put the cash in. So because as interest rate is going up right now, I believe banks are also increasing their savings in return. So you want to put that money in that. You don't want to put it sitting in your this thing. So, I mean, from United States perspective, the best thing to invest in right now is TIPS, called Treasury iBond. So I don't know if anybody can invest in United States. So right now, TIPS return is 9.2%.
Okay, but let's just clarify that 9.2. It's how do we start now? TIPS are
it's renewed every 6 months. Okay.
Good. Treasury inflated protected security. So like it's a bond, it's a treasury bill. You are lending money to the government, but the government says 50% of that money we peg it to inflation, right?
Right.
And then 50% is what you are getting is 9% because inflation in America is 8. So that's what you're getting. So it's not easily 9, it's just 50% that pays you 9. The other 50% is paying you nothing.
Yeah, the 50% is paying 9.2%.
And you can't sell for 5 years.
Really? I mean, you can sell, but you have to return the interest of 3 months. If you
Yeah,
sell.
so it's yeah. So I'm just trying to make sure people get the full picture. That is, you get 9% on 50%, and if you sell within 5 years, yeah. But I mean, like I said, there are some. I completely agree with you. There are some other assets that pay you some good dividends. You can also take a look at. I used to like staking before, not so much now because of this crypto thing. But there are lots of good yield farming out there that pays you if you want to do that. Yeah, but Eniola, completely get the commentary and I appreciate it. Where are the females on the spaces? Females invest a lot? I mean, MTN shares had a lot of females investing. Where are the females not calling to tell us where they're going to invest the money? I'm sorry if I'm being not being PC, but I would love to really hear someone say, hey, this is how I'm investing, and the person is. I really would love to hear. If you want to speak, I'll just put you straight to the line. Sorry if it's a piece, not free PC, but I really would like to hear where the ladies, what their thoughts about investing and all that. Really make for an engaging discussion. Ekwe, how you doing, sir? Mr. Rinze, what's up?
Yeah, hi, Carlo.
Hey, hello, how you doing?
I'm good. And you?
I'm very well, thank you. What's happening?
Okay, on the topic of food prices, if we're expecting to see food prices to increase in the future, say 30%, currently we have about 57% of disposable income in Nigeria going towards buying food. And if we see additional 30% increase, that will push up the portion of disposable income that goes towards food price, purchasing foods in the home.
Yeah.
So this means that it's possible that people will starve today.
And you're not using a figure of speech. You're actually saying that people are going to starve. It's not a figure of speech to say, hey, I'm going to die of hunger. No, people are actually going to die of hunger if the current situation persists the way it persists. Because even before we had Ukraine issues in Nigeria, we've had a food problem because of the insecurity in the middle belt and the north. We had a food problem. So food has always been up. Our CPI, which is the Consumer Price Index, what tracks inflation, is high because of food. Food is 50% of that basket. And like you said, 67% of disposable income goes towards food. So I've been screaming since last year, take $1 billion, import food, just to calm down, just to flood the economy with food so that we reduce the prices, but we didn't do it. Right now, if you take $1 billion to go buy food, you won't even find food because of Russia and Ukraine. Germany has sky-high inflation now. Everyone is looking for grain and all that. So, I mean, I saw Abuja, one bakery just put out their new prices. They've increased price of bread and all that. It's coming. I want people 2 months ago, go buy food, store it. This is food inflation. It's not just inflation. Lack of food is coming. So unless something happens in the short to medium term that can change the trajectory, maybe there's peace in the Ukraine, then maybe things will change. The US sanctioned Russia. US sanctioned Russia, but the same US has told their farmers to go buy Russian fertilizer. Biden told them to go buy Russian fertilizer. So this is the president of the United States telling American farmers to go buy Russian fertilizer. Why do you think he's telling them? Because there are still something's going to happen.
Yeah, also that is already happening in Sri Lanka. So because we
Crazy
follow
stuff.
Sri Lanka recently, so they have to reduce their work days to 4 days because there's no gas and there's no food. So so
it's scary when you think about it. That this is not having to do with economics. It's a scary time to be in the world right now. I don't think we really understand what the Russia and Ukraine to combine is about 40% of grain exports, and that's just the grain. Fertilizer is potash. That's Belarus, Ukraine, and Russia as well. That's taken off the table. You see countries. Indonesia said no more exports of palm oil. You see, is it India said no more exports of potash and fertilizer and all that. So people are doing food diplomacy now. Is I'm not going to export food to you. Just like COVID, I'm not going to export stuff to you. I'm going to keep it indoors. So we have to start Nigeria. We do have a reserve. I know when Buhari came, we sold a lot of the grain reserves. We sold a lot of it to quote unquote reduce hunger. Have we replenished those reserves? If something happens today in Nigeria, can we get food in? I went to Bauchi. What year was this? 2000 and oh my God, what year was this? 2020 or so. I'm not sure, 17 or 16. And I saw World Food Program, those white trucks, World Food Program. They were going to the northeast. I saw them in Bauchi. Unbelievable. This stuff you see in Somalia and on movies, this World Food Truck Program, a long convoy in Nigeria. I was like, what? When you see that, it's like it brings it home to you that this country is really. Lagos is a bubble. We're on Twitter. We're in a bubble. People are surviving in Nigeria via the World Food Program in this country. Richest economy, largest economy in Africa. We have crude oil, but people are surviving on World Food Program. So imagine what's going to happen now. Where's the World Food Program going to get grain from? Okay.
Yeah, and then secondly, what do you think about the oil tanker market so far?
What does that mean?
I'm just curious.
What's oil tanker? Is it like on land, on the sea?
On the sea, yeah, the sea, the oil tankers.
It's how that market is now. It's everywhere. Last year, wasn't it last year that oil was priced at $0 because they couldn't get storage, right? So it's a very high risk market. But if you have loose money and you can build yourself a super tanker, you can rent it out. Because what they do now is they load oil on those tankers and park it near India or near Asia or near a country. So when you want oil, the tanker sails in there and gives you oil, like a floating storage. Yeah. So you just collect rent. So if you have a tanker, you just sit there, they give you crude, and you just sit there in a country. They don't move. Nigeria doesn't have oil tankers. Saudi has tons of them. Even Iran has tons of them. They just park them on the high seas and they wait. So when there's a demand, they just sail in. Nigeria has got to go get one on spot market, that kind of stuff. So I buy a particular company. If I get the name for you, that's what they do. They sell the gas compression and also they hire out tankers. It's a US company. If I get the name, I'll let you know. I'm just going to search for it right now. That's what they do, and they seem very, very profitable. They got good what's it called? Good return in terms of dividends. They basically rent out oil tankers to folks that way. They build and they rent out and manage. I'll try to get the name for you. Yeah. So if you have the money and you can put it aside, it's good for you.
Yeah, I think currently oil and gas is kind of good, but you want to be careful not to hold it long term because the only time oil and gas is going up is because of what is going on right now. Once everything's settled down.
I don't think so. I think oil and gas is going to be high forever because I don't think it's Ukraine that's causing oil and gas. Oil and gas was up well before Ukraine. Well before, a year before Ukraine, oil and gas was nearly 100. What's keeping oil and gas?
But if you look at the stock right now, for instance, oil and gas is up by 70%, while other asset sectors are going down.
True.
So I think
the point is there's a cycle around the oil and gas industry, and I think currently we are reaching the peak.
I don't think it's a cycle, guys. I don't think
when the relevant Federal Reserve, relevant central bank or monetary authorities keeps hiking rates like we have seen in recent times, especially in places like the US and of course around the Eurozone and the Euro area, and then of course the UK, what we're going to see eventually is a situation whereby aggregate demand, like I said earlier, will be impacted or impaired. And if that is the case, another cycle of, say, we can now start seeing some level of contraction within the oil and gas space. Also, demand for energy will reduce when household has priorities choices to make.
Yeah, reduce to what? Reduce to what? Yeah? Reduce to what?
I mean, we expect it to. There was a point in the whole of this phase where we had to do about more than 10 million in court, right? That was when we had storage issues, even at some point immediately after COVID-19, and then oil prices were even selling in the negative, right?
Yes. But so let's go back to Ekwe's point, right? Why is oil high? Why is the price of oil?
Oil is high because we have supply side issues.
Why do we have supply side issues?
Because sanctions have been.
It's not sanctions. It's not sanctions. Oil was high before Russia.
Earlier, we had the OPEC issue,
I think
right?
We had structural issues.
It was at 100 plus. Well, a year before Russia.
Are we talking about Nigeria?
Global. Oil is a global economy, right? Oil is a global economy. Global commodity. Oil price has been nearly $100 before Russia even sent to mass troops at the border of Ukraine. It's high because the Democrats came into power, and the Democrats have a green agenda. So they passed policies. They passed policies to restrict lending to fossil fuels, to restrict the pipeline from Canada to have taken crude oil from Canada to the coast to be exported out. They reduced, they increased number of regulations. They reduced permitting. This reduced, because when shale oil, what Trump had was shale oil, and he used shale oil. Remember when Mexico and the rest were fighting, his shale oil came in and was able to use shale as a swing to force them to agree to OPEC and all that kind of stuff. There's no more swing. There's no more. I haven't had shale oil in a while. No one's talking about shale.
Don't forget that President Biden still had to inject through Congress approval, some shale into the market.
But the price has not changed. The problem is not oil. The problem is refining.
No,
the problem is refining. America is at 99. Let me share the chart to you. America is at 99% refining capacity. So even if they find crude oil today, they can't refine it because Americans are no longer approving new refineries. The refinery in California is being converted by Marathon to sell biofuels now. The refinery in Louisiana, Shell tried to sell it. Nobody could buy, even with $1. Nobody bought. Why? The hassle. You buy, they're going to tax you or regulate you to debt. So they're trying to phase out. Biden said it in his campaign speeches. We will phase out fossil fuel. You've heard them say it not once, not twice. So the reason why he's going to Saudi today is because he's going to lose the midterms. They need domestic oil gas prices to fall. Left to them, they like high oil prices because it makes people stop using fossil fuel cars and buy EVs. That's their game plan. That's why oil is high. And until you change, if the Democrats stay in power, oil will never come down, even if Russia and Ukraine have peace today.
I partially agree with you on that. I partially agree with you on that because this policy you're talking about has been done like a year ago or something.
Exactly.
And the oil price was at $3 or $3.5 at that time. But right now, oil price near my house, near my apartment right now, oil price is about $5. So I think the contribution from Russia and Ukraine war is also a big.
But you don't import. American import of Russian oil is negligible.
This is how the market works, right? It's like you saw that, there's a shortage at a place, and then you want also to make benefits, so you inflate the price as well. I mean, I'm not saying there's a shortage of oil in America. I mean, if you listen to Biden's speech last time or last week, he was saying that these companies they are intentionally inflating the price of oil in America. Because there's a shortage of oil. I mean, because there's a shortage of oil in
Biden, Europe. But I'm sorry, but the Democrats seem not to understand economics.
Yeah, 100%. I agree with you.
The data is not, there's no hidden data in America. You can Google refining capacity. I can share it. I shared it on Twitter like this week. If you go on my trend, you'll see where I shared refining capacity. You're going to pull it up.
What I'm saying is that, I mean, even though when the policy came in, the oil price was still at $3.5 or $3, $3.2.
Yes, a gallon, yeah.
It was fluctuating around that price. But right now, oil price is at $5 in places like Texas South and in the what's it called? In the east, we are in the east, and we are saying about $6, $6.5. So I think, I believe Ukraine and Russia was contributing partially.
How?
I mean, how is because 40% of the Europe oil, right, is coming from where? It's coming from.
Well, America is not exporting oil.
I mean, okay, but if there is a shortage in a strong economy like Europe, it's gonna affect America, no?
How? That's what I'm asking you. How? Tell me how.
How? Because this company okay.
Eniola, I was going to ask you. Up until February, right?
Gibson's here. I see you. Don't worry.
Like how much do you get gas on a norm, right?
$3.2.
And that's Eniola. Where do you live? And if you can answer, where do you live? I don't know if you can see.
I live in Texas, Dallas. Yeah.
Okay, that's very, very cheap. So Texas 3.2.
Average $5 right now.
Average was never up to $4. Never up to $4. Now it's more than $5 right now on the average. The point. Okay, the point is this, right? Under Trump, they were exporting crude oil. Now they're no longer exporting crude oil. They had shale oil, no more shale oil. They were doing the pipeline from, what's it, Keystone Pipeline, that is off. They've told the banks have come out, all the top 5 banks in America, Morgan, Chase, Wells, have said no more lending to oil and gas in Alaska. And in the next 30 years, no more lending to oil and gas in America. They had the conference in Scotland, what was that, COP23, where all the nations really in Europe and a few in America said they are going to stop fossil fuel. Remember that lady, what's her name, the 12-year-old lady, saying that we killed her future. What's her name?
The Swedish
Greta.
girl.
Yeah, Greta. Yeah. She was a star. Why don't they put her up again now? Because I
agree with you. Like Democrats,
they dug this hole. They dug this hole of Germany saying.
Let me ask you: if UK is short on oil, and then they ask United States to provide them some from their reserve,
yeah.
What will happen to?
But the US has given them 1 billion barrels a day for 180 days. It's not, because those are reserves. It's not what is in. It's not what is today.
Like, it's going to result in shortage, right?
But
I mean, like I'm an investor, okay, and I said, okay,
it's still a supply side thing, yeah.
But how can it be supply side if it's from?
Inflate my price just to like.
Okay, Eniola, I have 10 loaves of bread in my house. I eat one a day, but I have 10 in my fridge. I eat one a day. I go to then you say, give me one from your reserves. I give you one. I have 9. How does it affect the one I eat every day?
No, it won't affect it, but it will just be responding in such a way that it's reducing somehow. And that is how that is how the market is. If something is reducing somehow, it's just gonna be okay. Let's inflate the price.
Just a year ago, Vice President Yemi Osinbajo went to Dubai and was saying that they were not going to lend Nigeria any money for even LNG. They said no more funds for fossil fuels and gas. Go back and Google Yemi Osinbajo. He went to Dubai and he was lamenting that they are trying to stop LNG getting investment because the West, the Democrats, want to remove investment from fossil fuels. This is what they were doing. It comes to a head because of Russia. It is Russia that has exposed the soft underbelly of this crazy policy. And then they had the winter where there was no wind in the winter. And then, of course, Berlin had to then... UK now has said no, they're not going to shut down their coal plant. They've asked them to extend the life of the coal plant. Germany is bringing back coal. Japan is bringing back coal.
They also want to bring back they don't want to shut the remaining 3.
Exactly. It has nothing to do with oil. They realize that you cannot have a fossil-free future. It's not possible with alternatives and solar to cycle in power during the winter. Before Ukraine, Gideon, what's up? I kept you waiting. Gideon, jump in if you want to jump in. Let's not have a monologue.
Okay, thank you very much. I just want to ask a question. I don't know. It's coming from the Nigerian context. Maybe this was discussed before now. I came in late, but when I came in, I heard someone talking about investment in Nigeria. You know, looking at the whole economic situation, inflation and everything, and the devaluation of Naira and all whatnot. I am studying out in Europe, and before I came up to Europe, I know 7 years ago, I changed Naira for Euro. It's about 300 or 290, and it's about 600 Naira now.
Yeah.
So for example, say before I came into Europe, I had some investment I kept maybe in the bank, say like 2, 3, or 5 million 7 years ago. What that 5 million can do to me 7 years ago, now I can do barely nothing with it.
Sure.
You know, so I don't know. What do you think about treasury bills for now? And what are the best ways we as Nigerians, and even my siblings and my friends at home, who some person was sending me a message to ask, you know, how can we invest meaningfully in Nigeria? Keep estate whatever out of it, because that would demands time, you know, commitment and all whatnot.
I hear you.
Particularly, what do you think about treasury bills for now?
I think it's a great question, right? So what should you invest in if you're a Nigerian without maybe all this big time real estate, right? I think the answer depends really on how long you want to invest. But let me just make this quick point, right? Yes, how long you want to invest. If you are investing, or if you want to invest for more than 3 months or up to 3 months, then of course you can only do treasury bills, irrespective of the returns. So treasury bills are you borrowing money to the government, and the government pays you a fixed return for 91 days. So if you are investing for only 91 days, you have to do treasury bills. You have to do fixed deposit in the banks. You can also do what's called commercial paper. Ask your banker about a commercial paper. It's like a fixed deposit, but it pays you higher than a fixed deposit. It's the bank's customer borrowing money from you. So the risk, the quote unquote, is higher, but you might get a higher rate. So ask your bank commercial paper. These are short term that you can invest. I don't think any of these three I have mentioned will beat inflation. But remember, right now, you cannot really beat inflation with anything that is risk, that it does not have risk. You are trying to reduce the loss from inflation. So it's a loss reduction strategy rather than a capital appreciation strategy, meaning that if you buy treasury bills today, you are going to make 4%, 3%. If you buy treasury savings bonds, which are like for 2 years, you make about 8%, 9%. Inflation is still 17. You will not make 18 to beat inflation, but you will save at least that 7, right? So if it's 91 days, it's treasury bills, it's fixed deposit, it's commercial papers. If it's up to a year, you want to invest for 1 year, then you are talking of maybe your savings bond. I was talking maybe a year to 2. You're talking about your savings bond. You're talking about corporate bonds. So you are lending money to a corporate in exchange for returns. Because you are lending longer, i.e. 91 days to say 24 months, you get a higher rate of return. So you might get anywhere like maybe 14%, 13%, 12%. So you are lending from 91 days to 24 months. It can be federal government bonds, it can be corporate bonds, right? So you get a higher rate of return than the treasury bills and commercial paper because you are lending longer. That's what you can do. Once you want to invest from 24 months upwards, maybe to 5 years, but a minimum of say 5 years, 4 years, that's when you can do shares. That's when you can say, okay, I'm going to buy a share like maybe Zenith Bank, right? Because the dividend yield. The dividend yield means how much your return will be from the dividends that they pay you if approved by the board, right? So that dividend yield will give you, give or take, maybe about 13%, 14%. This is minus your capital appreciation, right? You might also want to do what's called a REIT, a real estate investment trust. I think UPDC has it. So it's like you're buying the property, but you're not buying property. You are buying property to take advantage, right, of the rentals that will pay to that company, and the company pays to you. So if you are doing for up to 5 years, you are doing your mutual funds, you are doing your ETFs, you are doing your REITs, and you are also doing bonds, federal government bonds, corporate bonds that are more long dated. So you get a higher rate of return. The problem is at this level of investment, you are taking a higher amount of risk. All your money can go. Once you buy shares, all the money can disappear, but you can get a higher rate of return. You should also consider foreign investments. So in Nigeria, you can invest in Euro bonds, right? So Nigerian government issued Euro bonds. So you can invest in your dollar, take your Naira, change to dollar, go to a company like, I always talk about FCMB, go to FCMB Asset Management, ask them, say you want to buy Legacy Dollar Fund. You can invest in Nigerian Euro bonds from there, right? And then you can have dollar exposure whilst in Nigeria. That is possible. And lastly, you can invest in, say, foreign stocks. Get all those apps, download, invest in foreign stocks, and see what you can earn. Gideon, have I tried?
Perfect. Because like you have narrated before now, it is very clear and obvious today that what is happening in Nigeria is scaring, and people are really confused. I have friends in Nigeria today who told me they have already, opened domiciliary accounts, and they are changing. They are in Nigeria. They have not even come out from Nigeria into Europe or America, but they have changed their savings in Naira into foreign currency, either dollar or whatever. But the problem is, what are the indices? Like someone was saying before now, if there's a change of government today, tomorrow, a Peter Obi come up and then he's able to adjust the financial situation we have today, probably, who knows, dollar or euro will now, sink down to 200 or 300. But I'm very skeptical about that. I don't know. What do you think? Do you think there's going to be a miracle overnight that would, take dollar back to 150, 120?
Yeah, good question again. Dollar rate is just your exports. If Nigeria exports more, dollar will crash. That's simple. If we export more, dollar will crash. Remember what I told you in 2007, 2008, back then, the world had a recession, the Naira did not crash. Soludo was boasting, Soludo was boasting, if you have dollar, go and sell because Naira is gaining value. And people were selling because Soludo had a lot of foreign reserves in his kitty. We had paid off the debt Nigeria was owing. Right now, all the crude oil, 100% of the crude oil that Nigeria sells is going towards paying debt, not even salaries, debt. Then we take taxes and pay salaries before we even build roads. So our economy is upside down, So we are exporting cocoa, then we import petrol. So all the money we make from exporting cocoa, we used to pay for petrol. If a president comes in today and is able to fix the export side and reduce the import side, dollar will rise. Naira will rise. It will fall from 600 to about 400. Yes, it's very easy to do it. So it's not impossible for Naira, the exchange rate to go to say 300. What it needs is just exports. If you export, the Naira will get value. CBN can't make Naira weak or strong by passing circulars. It's by exports and import substitution. Does that make sense? And tell your friends, if DOM account is not an investment. If they want to invest in dollar, they should put it in a dollar fund. There are lots of companies that do it. I just mentioned FCMB. I think IBTC also has one. I think Afri Invest also has one. Lots of companies do it. IBTC also. Dollar account is just an account in a foreign currency. They pay you one minuscule return. So go at FCMB, say Kalu sent you legacy US dollar fund. Tell you want to invest in it, right? All right, guys.
Thank you very much.
You're welcome. We'll be here for 3 hours, guys. 3 hours. I was waiting so I could see if a lady could come on air, but they are not. So we'll have to start to wind down, guys. Big Chief, you have your hands up. We're going to wind down. So what's up, Big Chief?
Yeah, I just wanted to point to something that seems to me like we mentioned briefly, but we seem to have just gone past it. And of course, I think it's important to explain a little bit of the psychology behind it. The point is the idea of price mechanism in the sense of how the demand and supply, right, changes hands, and then of course determines the price of anything or the value of anything, still applies to the USD as well. I mean, merely listening to you now, right, I could figure that CBN governor then, so Ludo, coming to the market to say, sell the USD, right? If you don't want it to lose value while you are holding on to it, because the Naira is going to appreciate against it.
Yeah.
I think it also speaks to some part of behavioral economics, right? The point is, we know that we need the supply of the USD to ensure that the Naira gains necessary value or perhaps does not lose value against the USD. In some cases, the external reserve might not be enough to support that kind of intervention, in the instance of supplying enough to ensure that that value is stable. Like I said earlier, we need to find a way to continue to earn foreign exchange, right, in such a way that we have enough supply. So if we find an administration, right, that people tend to love or trust in, because I can see there's some subliminal kind of things that I've started to notice about Nigerians these days. I don't want to talk politics, but I mean, people just chip in words like Obi, this person they trust in, they chip in those words into conversations, showing the kind of trust they have in those kind of people. I think as of August last year, I did an estimation and I found that about 18 billion US dollars are held in domiciliary accounts in Nigeria. Our external reserve is just about 39 billion as of Friday. So the point is, if those kind of funds find their way into the market as a result of confidence in the new administration, right, it may actually cushion that impact. And of course, if we have the necessary accretion, I mean, we were able to generate more. Big
Chief, say that figure again for people at the back. How much in DOM account, how much in foreign reserve? Just say it again for people at the back.
As of last year, the estimation I did was putting it at around 18 billion US dollars. Right, that people are holding in domiciliary account. Now, as of Friday, this past Friday, don't forget that what we have been saying here all day points to the fact that people are creating more value to their domiciliary accounts. Now, as of Friday, our external reserve, our USD external reserves sit pretty just around 38 or 39 USD billion as of Friday.
Yeah.
So it indirectly implies that more than half of what we are holding in external reserve, some people are holding in DOM account. And if they are willing and able to sell it off, the Naira will automatically gain some ground against the USD. That does not mean it is sustainable. That's when I am now painting the picture of, say, if we get more foreign exchange proceeds, right, such that there's enough USD for people who need them in the economy. Don't forget, now as we're speaking, some people are going to resume for fall in the US. So people are resuming fall also in the UK. All across Europe, Nigerian students are going. This Japa idea that we are portraying is also going ahead to strain the little liquidity we have within that sector. There are also claims that more than 500 million USD is being held down in foreign investors' funds that are unable to exit the Nigerian market.
Yeah. So, I want you to land like. What I'm saying is this, right? The point I made at the very beginning is this: if Nigeria gets an election without rancor, and people believe that the new president was duly elected There was no cheating. The economy, I believe in the first 3 months, 25% gain. The Naira would gain about 20-25% immediately. The economy would double. Because there's just going to be that optimism. You are giving the figures to back it up. Why would anybody keep 18 billion in a dumb account paying zero? Because they are afraid because of the Naira. They are afraid that if they keep it in Naira, it will lose value. But if they saw, if somebody came and did a diaspora bond that was paying, look at Euro bonds for Nigeria today are paying 8.75. Very expensive.
Exactly.
Because we are paying expensive. We are paying more than Rwanda because they don't trust our economy. Nigeria used to be in the JP Morgan bond fund, which meant anytime you want to invest in Africa, you must, or in emerging markets, you must buy Nigerian bonds. So right there, you must buy. There's no, you must buy. So we used to get $1 billion easy. We are out of that bond index. So we have to now go borrow money and pay 8.75. Do you know that if you're an American and you own a home, you can take a mortgage on your home for $500,000, right? Bring it to Nigeria, you are paying the bank 4% on your mortgage for home, $500,000. Come to Nigeria and buy the Nigerian 30-year Euro bond, paying you 8.75. So you are going to make for the next 30 years 4% guaranteed. If you for what?
The opportunity.
Yeah, 4%. That's what Nigeria will pay you for 30 years because we've messed up our economy. And people are celebrating. I saw a tweet. One guy was saying that people are rushing Nigerian bonds. He thought it was a good thing that people are rushing the bond. People are rushing the bonds because you are dashing money. You are dashing money out.
People don't understand this thing until they get involved in the process of ascertaining the value of this asset.
So
let's
just hope that we get that very, very good election. I don't say there's no economic variable. Soludo could talk with confidence because if you tried him, he would just release $10 billion on the foreign reserves and crash Naira. And everyone knew he could. But right now we know Emefiele has only 38 billion. What can 38 billion do? Nothing. If you talk, the crypto boys have more money flowing in than the Central Bank of Nigeria. That's true. They make about $1 billion a day in transactions. So we have our options are not. We don't. That's why he's paying 5 naira. If you flow money, you get 5 naira. We need to get remittances in, but you can't get remittances in if you are chasing a strong naira policy. This is the thing.
You can't incentivize me with 5 naira when the margin is almost 190 naira in the parallel market.
Yeah, so so let's just hope for the election. Thanks, Tunde.
Yes, you see, I don't want us to waiting for the election. Let's look at what really happened to our economy. Central Bank as of today has not released their 3 years of the data.
And they will not release it today. They will not release it. They will not release it.
Because we all know why. You see, the economy is beyond. That's why people are keeping money in dollars. You have a ways and means of 19 trillion. So,
it's not 24 trillion. They borrowed about 2 trillion in the first quarter. It's not about 24.
19. No. 19. 19.
Let me get you the data and put it on my timeline. Hold on.
No, but whatever the data is, it's a lot of naira printed without issuing a bond. So there's no dollar backing that up.
That is it. And the finance minister has told us that, look, government is virtually, even the acting accountant general has told us that government is virtually borrowing money to pay salaries.
Man.
So even this 600 and something rates, people are scared. People are afraid that this thing will drop considerably. And that's why they are factoring in the pricing of our Euro bond. Because why, for instance, will the government not encourage with our 1 year treasury bill rate is still coming down with higher
inflation. So we are being punished for keeping the naira, and some people are being encouraged for bringing in dollars. Then that government, so they are telling me, go and keep your money in dollars. Our politicians are spending dollars in their campaign, and you're not saying keep naira.
Yeah, Tuna, we hear you. I think that's the point we're making about the elections. That once we get a good team in,
and when the elections will take place next year,
but nothing will change. Tunde, nothing is going to change.
It will not change.
So let's not
in the short term. Okay.
Tunde, nothing's going to change. So let's just move on. Like I said, the elections are going to be the real, should we say, seismic change that would happen in Nigeria if we get in a guy that we believe was elected properly. Then the economy will boom. It's very simple. If we don't, we're going to go back to, if you guys were alive during June 12th saga, that's what will happen, and that one is going to be crazy if that happens, because then no one will invest. It will just be crazy. So let's just pray that we get a very, very good transition to whoever it is. I'm just really optimistic towards that. Guys, 3 hours, 4 minutes. We have to start to shut down, right? So thank you all for tuning in. What do we have next week? We might have the book next week. I'm lining up also. We have another guest that wants to come in and talk about the research report really for Nigeria for Q2. So we're going to have a company come in here and talk to us about the research report for Q2 Nigeria. Lots of good data in there that we'll talk about. So I will invite you guys as usual. We'll try to do this on Saturdays. We may change this time to Sundays. People have told me that Saturdays are always full for them. Could we move it to Sundays? I'm thinking about that. Also, guys, we also do a podcast called, or a series called The Economics of the Politics, where we talk about the politicians, but their policies, right? Just to understand what's happening, and then we can know better how to analyze the promises and the economic plans. That is mostly maybe once a month or once a quarter, that kind of stuff. And then we'll sort of like let you guys know. Someone is asking me to reiterate the 4% Euro bond. Well, if you live in the US and you own your own home, you can go take what's called a HELOC, HELOC, a home equity line of credit. If you take a home equity line of credit, the rates are usually from 3.4% to about 5%, right, in dollars. You can take those dollars and then you can invest in a Nigerian Euro bond. Nigerian Euro bonds pay you anywhere from 8.75, but please check the yield to maturity. 8.75 is just the coupon. Make sure you ask them, write it down. Make sure you ask them for the yield to maturity. Then the difference between what you pay to your bank for the HELOC and what you will get from the Nigerian Euro bond is your profit in quotes for the next 30 years, because it's issued for 30 years. So for the next maybe 28 years, that's what you're going to get. It's supposed to be risk-free, but it's dollar returns for you right there. So it's something I want to take a look at. Remember, if you're buying fixed income, you want to buy short-term. That's one advice I'll give you guys. If you're trying to buy any fixed income product, you want to buy short-term because rates are rising. So you don't want to lock yourself into a rate that is rising. So always do short-term for now. So that's what I'll tell you to do. So for now, just do short-term till we know where inflation is going. Thank you, guys. All that left me to shut this space down. Thank you all for being good listeners. I appreciate you all. Stay safe. And thanks for all the guys that have called in. Andrew, Gideons, all that are here that have been convened in the past. Hope you guys have a good Saturday and all. I'll see you guys next week. Take good care. My name is Kalu Aja, and we'll see you guys again. Oh, guys, get my book. My book is out on Amazon. It's on Roving Heights. Title is Let's Talk About Your Money. Get the book. It's well written. All my experiences, about 22 years, investment banking, private banking, pensions, US and Nigeria. You would love it. 222 pages, 18 chapters of just good financial, personal information for you. So get the book, guys. You will love it. All right, guys, take care. Love you all, and bye.